All right, guys. Today we've got honestly one of the biggest days of the month, of the quarter. We've got so many economic reports dropping today. Let me know if the music is too loud. It might be. So many economic reports dropping today. Yeah, let me know if it's too loud. It should be fine though. We've got earnings coming out right now as we speak. We've had a couple drop already. We had Humana, H-U-M, drop about 30 minutes ago. Gap it up a little bit. Humana posted 1158 EPS versus 998, a beat of EPS. Revenue showed up at, or I don't know what revenue showed up at. Hold on. Etsy posted numbers too. Yeah, so Humana earnings beat expectations. They posted revenue of 32.1 billion. They expected 32.2 billion, so they kind of missed on revenue. They did beat on EPS though. Their guidance showed up at 16.25 versus 16.35, which is a little bit lower than expected. Adjusted EPS outlook affirmed though. Revenue went up. So Etsy also just released their numbers. We're going to put these numbers up in chat. Again, we got a whole gang of stuff coming out today, man. It really is kind of busy. You can see, like, I put the economic releases at the top of the screen so you can kind of watch to see, like, what comes out today. But it's a lot of stuff. I put the expected numbers, what's showing up. Yeah, we got Microsoft, Amazon tomorrow. Today we got Meta. Or no, we got, I think Microsoft and Meta today. And then tomorrow we have, like Apple and Amazon. So I'm going to be busy all freaking day today. That's all I'm saying. We'll do a poll here. Are you bullish or bearish today? Well, today closed red or green. I'm giving more options to the poll. Sideways. I don't know. There's going to be the four options. Ugh. No, so they're doing PCE at 10 a.m. Jet. PCE is scheduled for 10 a.m. today versus 8:30 usually. It's probably because we've got GDP today. We've got PCE today. We've got just a lot of different things coming out. And so, yeah, it's probably because a lot of different reports drop in at one point in time. So, yeah, so at 10 a.m. At 10 a.m. we have PCE. At 8:15, I'm going to put a timer up because we got a lot of reports dropping today, guys. We got so many reports, I'm not even going to title the non-farm employment change report. But for that one, we got about an hour and 8 minutes or so. Yeah, so again, here's the timer. This is when the non-farm employment change. We got prelim payroll numbers coming out at 8:15. We got GDP data showing up at 8:30. We've got employment cost index and wages coming out at 8:30. Consumer spending at 8:30. We got Chicago PMI at 9:45. We got PCE data and pending home sales at 10. We got crude oil inventories at 10:30. The president's supposed to speak. We got Atlanta Fed GDP now for Q2 set to drop today as well. So honestly, there's just so many different reports coming out today. It's hard to keep track of them right now. Yeah, so what's up? Faye, Pawn, VWAP, Jet. Nervous to the poll. So we did our poll. 52% think we're going to have a red day. 24% green. 18% think sideways. 7% say I don't know. Let's look at bond yields. Let's see what the bond yields are doing. 10-year treasury yields. They are down again. And so I don't know if people are like expecting a lower interest rate sentiment, but look at bond yields. So bond yields are down again. They're down to under 4.2%, which is honestly a pretty big like decrease in bond yields. Look at this. So bond yields have been getting better. It gives a little bit more optimism regarding stocks. It does give a little bit more optimism regarding stocks because like bond yields can give some signals for the economy, for the markets. Like when bond yields are lower, government debt becomes less attractive. And in practical terms, it means investors are demanding less return to hold stocks because bond yields are paying less, if that makes sense, pushing down or pushing up price to earnings, you know, multiples across the board. Generally, with bond yields going down, when bond yields go up, government debt becomes more attractive. When bond yields go down, government debt becomes less attractive compared to equities, especially for investors. And so capital that might otherwise flow into the stock market, you know, stays in the stock market if bond yields are decreasing. If bond yields are increasing, you know, capital that might otherwise go to the stock market might go into treasuries, putting downward pressure on share prices. But with bond yields going down, it means a little bit more optimism in share prices and equities, if that makes sense, right? It also means lower interest rate sentiment. So with bond yields going down, this is interest rate sentiment. You know, one of the most important correlations to understand about finance is bond yields and interest rates. Bond yields, and so here's the correlation. I'll give it to you guys again. Bond prices and bond yields inverse each other. And so if yields are up, prices are down. If prices are up, yields are down. Very easy correlation to remember. The price versus yield inverse each other. They do the opposite of each other. If bond prices are up, yields are down. If yields are up, bond prices are down. And then interest rates, especially mortgages, and bond yields follow each other. And so if bond yields are decreasing, it means we got a lower interest rate sentiment, which a lot of people are going to want right now. I still don't think we're going to cut rates. If we take a look at the rate cut expectations here, it's still looking pretty probable that we're going to not cut rates in May in about a week. 7.6% likely. This could always change. This is always subject to change. But if we look at the 18th of June, it's looking like we're cutting rates in June. This did bump up one. This was July a couple weeks ago. So this one had the greater chance of like no rate cuts in June a couple weeks ago. Now this has jumped up a little bit, and now it's over 60% chance that we're going to cut at least 25 basis points by the June meeting. So that's something else to watch and pay attention to today. Again, we did have some earnings. We had Humana come out with earnings. We had Caterpillar miss EPS and miss revenue. So Caterpillar, honestly, it's kind of flat, but it missed EPS, came in at 425 versus 430. Revenue of 1425 versus 14.5 expected. So missed EPS, missed revenue. Growth was minus 10% for Caterpillar. We also had Etsy show up with some earnings here, and they are flying right now. Look at Etsy go. Etsy up to 51.20s right now, 51.20s for Etsy. So Etsy is moving. It's up there. Taking a look at the NASDAQ this morning. Here's the NQ. NASDAQ is up to well over 19.5s. Slightly red since yesterday's close. You can see yesterday's closing price. See, that can't be right. Hold on. Okay, yeah, that is right. So here's yesterday's close. Here's where it's at now. So slightly red on the day so far, but not a huge red day just because it was up a lot yesterday for the NQ, the NASDAQ 100. But it's trying to get up there. And yeah, we just got a lot of stuff going on today. And then again, I think the president is supposed to have some type of round. So the president will be hosting a roundtable with CEOs and business leaders today to tout their investment in the U.S. Yeah, so it looks like it's behind closed doors, though, the president's speech. Let me check back up on the chat. Bitcoin 95K. Yeah, I mean, Arian, it's just a big day, so we're starting the stream a little early today. A little early. Just because all the stuff we got going on, to be honest. It's been so boring, bro. Like, honestly, my stream has done better. Like, my average stream now gets, like, 700 to 800 people with nothing going on, right? And that's twice as much as it used to get. But now if something's going on, I wanted to cover it a little bit early. Oh, the music's not playing. My bad, guys. Hold on. My bad. Hold on. Let's get the music back up, shall we? Oh, wait. I don't think I can trade. Hold on. There we go. Yeah, Tesla still sitting pretty nice here. Like if I pull up Tesla, look at Tesla. Sitting just under 290s. On just under 290s. We'll see if we get some continuation in this good pattern here. We got Apple and Amazon on the charts. And again, Apple does have earnings tomorrow. So, you know, if we take a look at Apple up there, we got gold prices low a little bit today. They're not super high. So yeah, we got Microsoft today and Meta today, and then we've got we got Microsoft, Meta, and then Apple and Amazon tomorrow. There we go. There's the music. All right, guys, so just to break through everything going on today, we got the advanced Q1 GDP estimate due at 8:30. The Bureau of Economic Analysis is going to be giving its advanced estimate of Q1 GDP this morning. It's expected at a huge decline at 0.4%. The last time it showed up at like 2.4%. So it's expecting a 0.4% reading for advanced estimate of the GDP report. Very sharp downward from the 2.4% pace in Q4. This is highlighting a pronounced slowdown in momentum of the economy. The new tariffs have prompted a record high March trade deficit as firms front load imports ahead of levies. Wall Street banks now see Q1 GDP contracting by up to 1.75%, while job openings have slid to 6-month lows, and consumer confidence has plunged to levels not seen in 5 years. In response to this intense lobbying, though, the president has signed an executive order granting temporary rebates of up to 3.75% on U.S. assembled vehicles and exempting imported auto parts from steel and aluminum duties, measures designed to soften the impact of the looming car tariffs coming through. We got U.S. home prices growth decelerating. The latest S&P CoreLogic Case-Shiller data showed up yesterday at 9 a.m. It showed 4.5%, which was a little bit less than expected and was down from the 4.7% that it was previously. This stems as economic uncertainty rises and market volatility curbs demand for home prices and prompts price cuts on 1/4 of Zillow listings. So a lot of investors are also pivoting to tariff-proof assets. U.S. policy shocks and all that stuff scaring a lot of people. Asset managers are shifting into more insulated niches. Gold mining equipment, Latin American currencies, or some, things that they've been doing. And again, gold is down a little bit. We're at 3280. So we are seeing a little bit better signs here as well. Here's Bitcoin. Bitcoin's still at 95, 96s. So Bitcoin is doing well. Also, yeah, I mean, if PCE comes in high, people are going to freak out. Yeah, PCE is at 9 Central Time. Yep, 10 a.m. Eastern. When I read here, I give everything in market terms. So when I read here, like when I give times, I'm talking about Eastern Standard Time because that's like universal market time. Like 9:30 opening bell, 4 o'clock close. Like it's universal market time. It's what most people gauge market time with. So, yeah. Yeah, so look at the NASDAQ coming down a little bit. I am getting a little bit more excited to trade. I put in a withdrawal request on Top Step a couple days ago. We're still waiting for it to go through, and then we're going to pivot to their new dashboard. But we're green in every funded account that we have. And our accuracy rate is over 50% in each one too. So we've been doing pretty good there. Yeah, NASDAQ is coming down a little bit. We're going to put this up on screen now too. I'm not going to trade this early. It's a little bit too early to trade, I think. But we can throw the NQ up here. Again, we did have some earnings drop today. I wouldn't say anything that was like major though. Yeah, so here's the NASDAQ. Let me pull this chart down a little bit. Again, we had some earnings. Let's talk about them. We had Etsy, IP, nothing really big. Today, the big boys are showing up, though, with Meta, Microsoft, Robinhood, QCOM, eBay, and more this afternoon. We're going to stream it like we always do. Just a busy day, busy time. Okay, yep. Bill Belichick's 24-year-old girlfriend, Jordan Hudson, stormed out of a CBS interview at one point and expected him to follow, according to TMZ Sports. Listen, I'm not judging that much, right? You want to have a young girlfriend and you're a millionaire, fine, okay? As long as they're, but you can't actually think they give a flying crap about you. Like I saw Dennis Quaid, I think it was. Dennis Quaid, my man's like 70. He's got like a little 30-year-old girlfriend or like wife. I think he actually married her. It's like a sixth wife. And this dude is like genuinely believing she likes him. He's like, oh, it's true love. It's like, dude, how, like, do you really believe this? Like, if I ever become that rich, never mind. I'm married. I'm not even going to go into hypotheticals. What do you guys think we're going to get today? Do you guys think GDP is going to come in higher or lower than expected? I got to change the song. Yeah, she's 24. No, she's 24. Again, the real issue is that I'm not even mad at him. Like, as long as he doesn't think it's actually love, and as long as he recognizes what it really is, then I'm okay with it. Look, all I was going to say is that if I was ever that rich, I would have people around me that weren't just yes man. Like, I would have somebody around me to be like, yo, John, she's not into you for your looks. She's not into you because of your personality. She wants the money you have, sir. Don't do it. Don't do it. And these famous people should have people like that in their life. And if they don't, they're just getting set up to get taken advantage of, you know. But they kind of deserve it too. Let's just be real here. They kind of deserve it. So I don't have any pity for Dennis Quaid, but still, or Bill Belichick. You know, I'm a Saints fan personally, so he'll be all right. Nasdaq breaking down here. We're at 19.5. So let's draw some levels here. Let's draw some levels. There's 19.550. I think that's a level. A lot of confirmations there. I'm taking a look at 19.6. 19.6 looks like it's a level. Man, this song. What a song. I feel like I'm in a freaking... I feel like I'm in a cult, like a trading cult right now. Anyways, we're looking at 19.5s is probably the biggest singular level that we're looking at today. It's close enough to where we're at now. It's a big psychological level. We'll also look at 525s up here. And those are the main levels I'm watching this morning. Do we buy this dip, though? I don't know. Yeah, I'm just lucky I met Carol before, like, I got with Carol. When I got with Carol, I was broke. She had to help me financially for a little while when I got with Carol. And so I'm just glad that was the situation, you know. I'm just glad that was the situation because I'd be the top 3 most worried person ever. Yeah, somebody... We're not a cult? No. Yeah, so we're under 550s now. Let's see if this holds. And again, guys, in about 50 minutes, we got what's called the non-farm employment change, the prelim NFP numbers. Those are pretty big. But I don't know how much they're going to move markets. Those are expected at 120,000, 120K. I'm not burning. I was wiping the sleep out of my eyes. Look at this big turnaround, though. Is this news release related? It seems that way, but let me make sure. Yeah, bond yields. We're still watching those pretty closely here. Again, here's the 10-year. Under 4.2% is a good thing. That's like an optimistic thing here. So I'm for it. A lot of people, the market wants rate cuts. Do I buy this dip right now? The market wants rate cuts, and so I think that's an optimistic thing. All right, Humana beat expectations. Stock is surging. Etsy did really well too. I did not have a... There it is. So DeepSeek releases a new math AI model for mathematics. Mortgage data did show up today. One of the things that we dropped this morning, if you look right here, is 30-year mortgage rate showed up at 6.89%. 6.89%. Last time it was 6.9, so it came in a little bit under expected, but not a shocking amount under. So basically, mortgages have flattened out in a period of markets now that the markets are seeing decreases in bond yields, which typically means lower interest rate sentiment as well, which generally means that people are more worried about the economy because, you know, probably because of this super big contraction relative to quarter 4 GDP. Now we're expecting 0.4%. Versus last time in quarter 4, we showed up at 2.4%. So GDP is contracting quarter to quarter. And yeah, that's not good. That's not good. So we'll see what happens here. But yeah. Yeah, so again, the president's supposed to speak today, but it's in like some type of CEO round table that is behind closed doors that we're not really going to get any information from. And so, you know, and again, today we got Microsoft, we've got Meta. We got to take a look at Apple, of course, like we always do. We've got a lot of companies drop earnings today, but Microsoft, Meta, Bitcoin, still sitting at 95s. I'll put 2 charts up here. I think 2 charts is a little bit better. Last chance. Yeah, I mean, we don't know, guys. So we, again, with big earnings today, the thing that you want to understand is that nobody freaking knows what's going to happen with stocks, with futures, with markets. I'll put it this way. Microsoft and Meta can have good EPS, good revenue, good guidance, and drop 10%. You don't ever know what's going to happen with these earnings. A lot of the moves are getting baked in now versus when the release actually happens. And so, yeah. Again, it's a big day today, guys. It's a big day. Today we got a whole gang of economic reports. So I'm not buying up anything right now. It's too unknown. Like if we get high inflation and weak economics, market might freak out. If we get a number of different outcomes, the market could freak out. And so personally, I'm just sitting tight waiting here. I'm not going to buy up anything right now. Not that I can think of. So just be careful, guys. NASDAQ's breaking down. We broke under 19.55. I'm looking at 19.525s now, 525s basically. We'll see what that area looks like. But again, we got a whole bunch of stuff. We got prelim NFP data going live at 8:15 or at 9:15 market time. So yeah, just be smart. Yeah, I'm checking out the news too. So yeah, gold going down a little bit, easing tensions maybe. They say that overseas Ukraine's ready to sign a U.S. resources deal as early as tomorrow, as early as today on Wednesday. Jim Cramer came out with some stuff saying stockholders are quote, not just arrogant rich people, end quote. As markets slide over 5%. Markets rose 9 out of the last 10 May, say experts. And so a lot of people say sell in May or, go away or whatever it is. But markets have risen 9 out of the last 10 May months, according to experts. So again, stock futures went down a little bit this morning. They're not down a huge amount. You can see the NASDAQ. I mean, they're decreasing as we speak, but it's not a huge drop. It's not a huge drop. Easing of auto tariffs did help markets with a, new string of optimism. That's the big thing that's happened over the last few days is the easing of some of the auto tariffs. Several heavy hitters this week, including 4 in earnings of the Magnificent 7 company. Yesterday, the president hinted that trade negotiations with India were coming along great and that the administration was close to announcing a deal, giving a little bit more optimism. But again, today we have Microsoft, Meta, QCOM, KLA, and more. Treasuries of 10-year, the U.S. 10-year Treasury yields are at 4.16%, or like 4.12% again this morning. If we take a look at this here, this is a good thing. Like, I want bond yields to decrease, and again, you can kind of see bond yields decreasing. The CME Group's Fed Watch tool shows the market's pricing in a 92.5% likelihood of an interest rate pause during the next FOMC meeting, scheduled to take place May 7th, I believe. It's an increase from 91.1%, so it's still pretty probable that we're looking at a pause. Yesterday, almost all S&P 500 sectors closed green. Just to put the market into perspective today, almost all S&P 500 sectors ended green yesterday, except for the energy sector, which was down about 0.29%. And if we take a look at like oil here, yeah, oil's had a tough time. So here's oil. It's under 60. So that's a big drop. Here's a 30-minute chart for oil. And again, you can kind of see oil's had a really tough run over the past few weeks here. Crude oil price per barrel falling all the way down to under 60. Here's $60 right here. And we're slightly underneath that now. So crude oil has just had a big fall. And that's one of the only sectors that were red in the S&P yesterday. S&P was up about 0.6%, sixth straight winning day, longest streak since November of 2024. Dow Jones was up almost 0.75%, and the NASDAQ composite up over 0.5%. We had some earnings yesterday. We had Visa, Coca-Cola, Pfizer with strong earnings, Starbucks with bad earnings. And then again, yesterday's economic reports were pretty bad here. They weren't really good. The Case-Shiller showed only 4.5% increase, below 4.7 or 4.8% expected. Consumer confidence showed up at 86, below the median forecast at 87.3. Jolts came in at 7.3, under the 7.5 million expected. So almost every economic report we got yesterday was weaker than expected. Okay, and this is coming in a market and a lot of stuff has been falling. Again, the NASDAQ 100 was down 12% from its previous all-time high at over 22,000. S&P was 9.5% lower as compared to the big high it put in at 61.47. Dow Jones, 10% down from its 52-week high. So that is the market right now. And, yeah, we got a whole gang of reports. We got ADP non-farm employment change, first quarter GDP, which is what's called the initial estimate for GDP for quarter 1, 2025. Along with the employment cost index at 8:30, we got Chicago PMI at 9:45. We got consumer spending, PCE, pending home sales, and more at 10 a.m. And then this evening, we got Microsoft, Meta, QCOM, KLA, and more. So it's a busy day. It's a busy day. We'll see what happens. Hopefully, we get some optimistic things. But yeah. Yeah, Supermicro Semiconductors had some really bad news. Like yesterday, the earnings that showed up were Snapchat. Snapchat's down a big amount. I almost want to buy Snapchat right here, being honest. I do kind of almost want to buy some of Snapchat down here. I'm not telling you to buy it. I'm not an investment professional. I have no freaking idea what I'm talking about. And I might be wildly wrong about anything and everything I say. Here's Supermicro Semiconductors. We're at 2980s here, chat. 2980s. So Supermicro Semiconductors, it had some news that came out yesterday that is panicking the market's panicking the market. So I think it pushed back its guidance. All right, cut its guidance is what I think I remember for Supermicro yesterday. Yeah, so it posted prelim numbers, 29 cents to 31 cents, 16 cents to 17 cents for third quarter EPS. Net sales 4.5 to 4.6. But its earnings are well below initial expectations. Supermicro dropped 16% in after hours yesterday after pre-announcing a big March quarter shortfall, and the transition to new NVIDIA chips could be the reason why. It blamed delayed customer platform decisions as it warned that its upcoming results for its last quarter will be much lower than expected. It also cited lower than expected earnings per share due to higher inventory reserves resulting from older generation products. And again, super micro under $30 a share, still big drop in markets here. So yeah, that is the markets kind of refresh today and what's everything that's going on in markets right now. We are paying attention to these four major levels sitting around us here, with the big one being 19.5s. Kind of sideways and rangy. I think we got a lot of reports today, so I'm not going to be shocked if the market does range sideways. And we'll see what happens. Looking at our poll numbers here, we did a poll earlier. 46% think we're going to be red today, 34% green, 11% sideways, 9% say I don't know. Yeah, and again, I'm gonna give you guys so the reality of it is, despite all this fear and craziness and all the stuff going on, despite all this stuff, the biggest statistical edge in any market ever in the world is buying indices long term, value investing and dollar cost averaging and compound interest long term and indexes. Basically, S&P, NASDAQ, Dow. If you DCA into those long term over a 20-30 year period, you are almost certain to make a lot of money. Now, it's never 100% because nothing is ever exactly 100%, but it's pretty freaking probable based off of all historical statistics. It's pretty freaking probable. And the people that lose the most during these big dips in markets are people that get emotional and scared and sell. The people who make the most are generally people that start to buy it up. And this is where Warren Buffett's famous quote comes in. It's better to be fearful when others are greedy and greedy when others are fearful. And there's a reason for that. Like when the market is in a mania, like I cut a lot of my stocks in December of last year. Why did I cut a lot of them? Because I saw like a mania happening with stocks. People thought the market couldn't crash. They thought the market couldn't come down. They thought that it was going to go up forever. And I was able to cut it. And again, I think that's a situation in which too many people are greedy. And so I got kind of fearful of it. And we ended up getting out at the right time. And again, now we're in a period where a lot of people are fearful. Does that mean we're not going to drop more? I don't freaking know what we're going to do. We might drop more. And honestly, this is so dependent on the tariff news that we got going on that I have no idea what the market's going to do. What I do know is that over a 10 or 15 year period, if I buy it right now, I am almost certain to make money. And I'm not telling anybody to buy anything. I'm not an investment professional. I have no freaking idea what I'm talking about. But I know if I buy right now, I'll probably be green. And so it really depends on what your plan is. Now, the hiccup in that plan is if you're like retiring imminently, you don't know what's going to happen over the next 5 years. We might drop for the next 5 years straight. And so if you're retiring imminently, your plan should be wildly different. If it was me, I would pivot to like bonds or something and just sit on bonds and get my guaranteed return of 4 point whatever percent. If I hold bonds for 4 years, I'll make 16%. That's basically back to where we were, and then I can get out and retire or do whatever. But with that type of plan, you might also miss out on some gains. Like talking about gains here, when we look at, this is why I like real estate, because real estate, even if it pulls back, prices almost always rise in real estate. Over a long period of time, long term, 10, 20, 30 years, prices are going up. Even if you buy like a bad property, prices are still probably going up, excluding commercial. Commercial's different. But again, I did this yesterday and I kind of got cut off by the opening bell. If you buy a $300,000 rental property, you got to buy it in the right spot. But you buy a $300K rental property, you're going to make probably what? 3-4% a year. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20. In 20 years, you're going to earn about, that $300,000 property is going to more than double. And so you're going to profit 100% plus from appreciation, most likely. And then let's say you're charging $2,500 for rent, a little bit under the 1% rule. Over time, this is going to grow as well. So you'll be able to ask more rent over time. Same thing. Let's assume rental income grows with property values. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20. In 20 years, you're going to get about $5,500 for that property. Now, you could probably, if you're talking about net, you want to reduce this by like 0.6%. We'll call it 4. We'll take about half of it off, about 0.4%. And so, yeah, you're still going to make about 3,000 something net. But the point is, your rental income will go up over time as well. So it's diversified. It's certainly not passive, though. It's one of the reasons I like real estate. Now, the stock market, if we look at the stock market, say you invest the same $300K into the stock market. On average, you're going to earn about 10% a year. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20. In 20 years, is that right? Hold on. I mean, this is compounding. 100K. Let's call it 9%. I feel safer at 9%. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20. Yeah, I don't know what I did that first time. So yeah, you'll about 6x your money over a 20-year period in the stock market on average. I don't know what happened on that last formula or on the last calculation. I must have clicked something wrong. But you'll about 6x your money in 20 years investing in the stock market. But this is not guaranteed. And if you get stuck in a market crash, it could all go away, right? And so bond yields are kind of the similar thing. So say you got 100K and you buy bond yields right now, which are about 4.2%, and say you can compound them, right? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20. Guaranteed returns in bond yields. You'll more than double your money in bond yields, guaranteed. But a 20-year period, doubling your money is not the best. Like, there's a lot better returns. Gold is one of the best inflation hedges. And honestly, gold has performed better than the stock market in a lot of ways, especially with relative to where it's at now. Crazy gains for gold over the last 20 years. So, you know, the whole point I'm trying to make is, like, if you want to hedge against inflation, do not sit on cash. Cash is where you lose money. Like, inflation is going to eat your money over time if you got that same 100K and you just sit on cash. Okay, we'll do a final formula here so you can understand the point of what I'm trying to say. If you got 100K and you sit on cash and you do not do anything, let's say you lose 3% a year to inflation. Let's say 2.5%. Right? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20. You are going to lose 40% of your money. 40% of your money over a 20-year period if you do nothing with it. Because inflation happens, it's inevitable. As Thanos said, it's an inevitability. You're going to lose money to inflation over time. And so stick your money in something is the point. And I can't guarantee anything. You got to figure it out yourself. The best move is probably a mix of all this stuff to diversify into multiple different things. That's what the pros do. And yeah, I like stocks. Depends on how long you're holding stuff, though. The purchasing power of your money will go down 6x in 20 years. Well, that's not true. We just did that as well. It's nowhere near 6 times. Yeah, it's nowhere near 6 times. Like, inflation averages what, 2.5-3% a year if it gets bad. But all right, so we're dipping down. We're under 15.5s. All right, here's 525. Look at my levels, though, bro. I'm just saying, my levels, top 3 greatest ever. Yeah, we got PCE today. We got GDP today. We have pending home sales today. We have Chicago PMI today. We have non-farm employment change prelim NFP data today. We've got Meta and Microsoft earnings. And again, I just wanted to show you guys, like, people that are scared to stick their money anywhere are always trying to justify it, right? The stock market, incredibly consistent. It's incredibly consistent. Palantir is breaking down. Now, it doesn't mean it's like the market over a century of data averages 8 to 10% a year, and that includes crashes. That includes pullbacks like we're in now. That includes all of that stuff. You know why? It's because prior to this pullback, NASDAQ was up 105%. in 2 years. And so to compensate for the really good years, sometimes we got to have a bad year, and vice versa. But it's incredibly consistent long term. And again, you got people that just sit on cash and they're so scared of sticking their money anywhere that they just end up losing a huge chunk of it to inflation over time. Yeah, we got Robinhood. Yeah. Okay. Oh yeah, you're right. At the first one I did 300K. Yeah, I mean you can do the same thing with 300K. I think I did 1.9%. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20. Yeah, so you're going to turn 300K into 1.7 mil most likely. Something along those lines in 20 years. And we could act like that's chopped liver. But, you know, if you can average 8 and 9% a year, the issue with day traders, what day traders have done to the market is that, like, you got so many people selling courses on stuff that, and they promise these ridiculous returns. Like, you got all these finance gurus on TikTok and stuff like that trying to just promise ridiculous gains. They're like, yeah, bro, you make 5% a day, you know. If you buy my course, I'll show you how to make 5% a day. Like, bro, if you make 5% a day, call Goldman Sachs up. Okay, they'll hire you right now. You know why? You're not making 5% a day. You'll never make that. Nobody will ever make that. If you make that within like 4 years, you'll be the richest person in the world. It's just not feasible. And the people pushing that like it's some type of reasonable thing are freaking rookies. You know? So just be smart. Understand there's a lot of marketing out there too. Yeah, I mean, real estate makes a lot. And real estate is diversified between rental income. I wouldn't say real estate makes the most. I would say I like real estate because it's one of the safest, right? I like real estate because it's one of the safest. Real estate and the stock market are my two favorites because, you know, and you can use the leverage of mortgages and real estate. Like, you can get loans on your assets, and a lot of the loans are tax-free, and so you don't have to pay big sums of money on the debt that you get, and then you can use that to expand businesses and do a lot of other stuff with it. So there's a lot of tricks in terms of real estate in that regard, which the wealthy know very, very well. The wealthy use and know very, very well. And yeah, there's a lot of reasons real estate's good. But it's not passive at all. No, it's definitely not passive. It's work for sure. Yeah, oil under 60, although oil's right at 60 right now. And again, if you want to check out Top Step, there's no PDT rule in futures. If you want to day trade with me, I'm day trading on Top Step's funded account program. Great way to learn. Most day traders lose. And so if you haven't already, check out Top Step. Great way to learn how to day trade. Again, in a situation where most day traders lose. Learning how to day trade in this structured environment makes sense. Top Step gives you a 50K demo. They test your skill with it. If you could pass the test, they fund you between 50K up to 150K with a 90% split. So once you're funded, it's very similar to funding your own account in terms of split. You get to keep your first 10K and then 90% split afterwards. Very similar to funding your own account. If you fail that challenge, you're out $50. It's not the end of the world. And that's much better most of the time than traders putting up 5, 10, 20, 30 grand and losing that for their first few accounts and paying your market tuition that way. Like, you might as well pay your market tuition with a funded account program versus funding your own account like I did, $4,000, $5,000, $6,000, and then losing that almost certainly. Most new traders lose their first few accounts, and this is just a cheaper way to learn. And Top Step's paid out hundreds of millions. They fund thousands. They're just a great way to learn. Again, they're an affiliate of mine. I'm biased. I get paid by them. Top 3 most biased ever. I don't even claim to be a good trader. And honestly, maybe that's why I need Top Step, is because I don't even claim to be a good trader. And so if you want to check it out, here's the link. I also pin it to the top of the chat. Great way to help support the channel. Understand CFTC 4.41. Hypothetical or simulated performance have limitations, guys. It's going to be a busy time right now for me, man. We got a lot of stuff going on. Yeah, so again, DeepSeek with a new AI model. I see a couple polls that went on. So analysts expect the average gold return year over year to be above 3,000. The gold price is expected to average $3,065 an ounce in 2025 and $3,000 an ounce in 2026. That seems a little heavy up there, no? And so again, we're going to get our x.com post out here as well. Give me a follow at Beginner Trades. At Beginner Trades. We're going to do our big news post, kind of breaking all the stuff down this morning, talking about stuff from yesterday. All the stuff that happened in markets. All right, so we just did our big post of the day, breaking all the stuff down in markets. Yeah, I mean, I think the bull market for gold is actually a little bit over 5 years, right? Like, I think if we take a look at gold, gold's been uptrending really since 2016. Like, look, so here's 2016. This is 2016 way down here. Right, let me move myself over. So here's 2016. 2016 is right here, and so we've kind of been trending up for gold since 2016. That's 9 years. So it's honestly why personally I'm not buying gold, is because gold has been uptrending for almost a decade, and that's not really like I'm not really interested in buying that up. That's too much. That's too much. I don't really want to get stuck in a 5-6 year downtrend for gold. And so, yeah, again, I just don't want to get stuck in a 5 or 6 year downtrend. We got 15 minutes, or we got 20 minutes until the prelim payroll data shows up. All right, so we're testing that 525 level in the NASDAQ here. All right, look, I'm going to trade a little bit, but I'm kind of, it's going to be small. Look at that 525 rejection that we had up here. I got to switch from I got to go to the micro. See, I wanted 525s too. This is the reason I'm getting a little bit more interested. Look at that 525 resistance that we have on our chart rejection here. Let me pull up Discord. Sorry, Pawn, if you sent me something, my bad, bro. Yeah, some of the good news is that China is easing some of the tariffs on selected U.S. goods. So it was reported that China had quietly compiled a list of U.S.-made goods exempt from the big 125% tariffs and levies, aiming to ease some of the tensions with trade without public concessions. Companies, particularly those relying on U.S. tech such as pharma and chip makers, are being discreetly informed about these exemptions. The list, though not disclosed, appears to be expanding, like China recently waived tariffs on ethane. This is allowing Beijing to maintain like a big firm public stance, but also kind of giving some easement behind the curtains. So that's good. Yeah, so gold is now outperforming the NQ over the last 5 years. Gold is up 100% in 5 years. NASDAQ is only up 90% basically right now. All right, so we're now over 525s. What's up, Beach? All right, guys, and again, we got about 15 minutes before the prelim NFP data called the non-farm employment change report going live. About 15 minutes. There's 8 a.m. scrum. We'll see if we get some movement from 8 a.m. Look at the price action show up at 8 a.m. All right, so again, we're coming down. We're at 525s. I will short this if we get a retracement back up there, like big enough here. We'll try. I'm going to add to this some. Okay. We got a little bit more room here now. All right, so we just took 2 contracts. We'll take maybe 3 to 4. All right, we'll take 3. We're just going to leave it at 3. I'm not going to take larger than 3. I think 3 is going to be max. See if we can do better than yesterday. Yesterday, I had just one feel in the market. Hey, bud. All right, guys, sorry. My son's coming in here. So we lost on that trade. I wasn't really paying attention to it because my son was in here kind of pouting. So we have prelim NFP data coming live in going live in about 11.5 minutes. So, and then we have GDP data at 8:30 in about 30 minutes. And then we've got PCE data at 10. So we got like a whole bunch of different reports today, to be honest. I mean, I think the short area was fine. I think I could have waited to short up here, but it's all good. Yeah, see, there's the breakdown. So it just kind of faked out. I'll try to take another one, but there we go. That's better. I'll try to hold the rest break even. The range is honestly kind of small. All right, it took half off, and now we somehow got like a better fill. But I don't want to get out right at the lows, so we'll see if we can fix our average here. There we go. So we got out a little bit more. We'll get out the rest right there. That should be good enough. Yeah, we ended up making a little bit back from that trade. So my short would have worked. It just kind of went up a little bit too high. I wanted it to reject here, and then it ended up coming back down there. Like, what I really wanted was this in this area. I wanted to reject here and come down and test these lows like it did. Just like it did right here. You see that rejection? That's what I wanted originally. But it just ended up squeezing up too high and rejecting here instead at 536s. So there's definitely some red pressure showing up. Again, we're right ahead of the non-farm employment data coming out. So all right, guys, 10 minutes here. 10 minutes. Yeah, and see, this is what I mean. Like, it's really easy after the fact to say something's a good or bad short area, you know. But this is what I was trying to short into, was this pressure. And we honestly got it. We just popped up a little bit too high, and this made me nervous, and so I ended up maybe cutting it. But the momentum was red, and we accurately read the momentum. We just kind of missed out on a little bit there. Yeah, I mean, GDP is expected to decline sharply, quarter to quarter. The big level I have is this 19.5 level. Like, look at 19.5 right here. 19.5 is a big psychological level. We're trending close to that. We got like 7 or 8 minutes before we got the prelim non-farm employment change data coming out. So we also have GE Healthcare saying the 2025 tariff impact of about 8.85, 2026 impact estimates below TY of 2025. And again, looking at our numbers here, well, today closed red or green. 44% think red, 37% think green. I'm going to end this poll right now, and we're going to do one based around GDP. Well, today's advanced estimate. All right, look at this flush. GDP come in higher or lower than the 0.4% expected. It's Q1 of 2025. All right, so vote on this poll: higher, lower, as expected, and then the other one's gonna just say I don't know. All right, so look at 19.5s. We're about to tap 19.5s. All right, so we got over 1,000 here at like 8 a.m. this morning. I appreciate you guys joining me. Do I want to buy this 19.5 level, or do I worry about we're just cracking down underneath 19.5? All right, so look, there's 19.5 evens. Just tapped it right there. All right, guys, 10 minutes left. 10 minutes. Or no, I'm sorry, 5 minutes left. Again, this prelim NFP data is expected today at 114,000 is what I'm showing, 114K. They might have changed this a little bit, though. I feel like the last time I looked at this, it was 120. Let me make sure. Yeah, one of the other places I see it, it's 120. So I show 115 to 120 non-farm employment change numbers for April. And so again, that's in 5 minutes. In 20 minutes, we got GDP releasing. All right, so we're at 19.5s again, consolidating here. 4 minutes left, chat. And so I don't know how much this one's going to move markets. I really don't. I don't know how much this one's going to move markets. And so we'll have to wait and see. All right, so there's the break under 19.5s, under 19.5s. All right, so there's the crack under 19.5s. We'll see what we get here, chat. Just be careful. All right, chat. 3 minutes here. Look at this retracement. We're testing 19.5s right now. Gold rebounding back up a little bit. And now we're coming back down. Again, we got Meta, Microsoft earnings today. Bond yields opened up lower again, under 4.2%. So we'll see what that looks like here. I'm going to put the dollar index up just to see what the... and then we'll take a look at what bond yields do. Dixie is still under 100, but up a little bit on the day here, chat. Up a little bit on the day. We got 2.5 minutes before the prelim NFP data drops. Isn't lower GDP ultimately bullish? I don't think so. I mean, I think it might give a little bit more credit towards rate cuts, but I don't think a weak economy is ever really good. You know what I mean? So Not necessarily for me. I don't think so. But everybody's different. Some people might consider it better. I don't know. All right, 2 minutes, chat. 2 minutes. And again, remember, the big report is GDP dropping at 8:30 Eastern Standard Time today. That's the big one. All right, here we go. A minute and a half left. NASDAQ is falling down this morning, falling down. Yeah, if inflation's high, it doesn't matter what GDP is. Like, and that's why, like, today's PCE inflation report is pretty big. So you're actually wrong, Todd. So we have 2 of the Mag 7. So we have Microsoft and Meta released today. Tomorrow we have Apple and Amazon. So in the next 2 days, we get 4 of the Mag 7. All right, guys. So we're dropping down still here, heading into this report. We got less than a minute. We got about 50 seconds left. 50 seconds left. All right, here we go. 30 seconds, chat. 30 seconds. Again, I'm showing anywhere between 120, 115 expected for April. Anywhere between 120 and 115 expected for April. It's that time, though, chat. It's that time. Again, in 15 minutes from now, we got GDP. So just understand that. 15 seconds. 10 seconds. 8, 7, 6. This is a little bit early. 5, 4, 3, 2, and 1. 62,000. 62,000. Way lower than expected versus 120 expected. Basically 50% less expected prelim NFP data. Look at the market fall on this report. 62,000 versus 115 expected. 120 expected. Again, 62K. Way weaker than expected. Way weaker. Way weaker than expected. Way worse, and the market has negatively reacted to this. Look at that drop. Wow. And this is ahead of GDP, man. This is bad, not good. Again, 62K versus 115 expected. Wow. Way, way, way worse than expected. Again, we got 15 minutes before GDP comes out, chat. GDP drops in 15 freaking minutes, bro. That's scary. 15 minutes until GDP comes out. It's the advanced estimate, so it's the least accurate report for GDP, but it's the initial one for quarter 1 of 2025. 62,000 versus 115 expected. Yikes. Scary, scary, scary. Previously, it came in at 155. Today, it showed at 62,000. And the market did not like this at all. Did not like it at all. It did bounce right at my 475 level, though. You'll love to see it. But we'll see if it continues. Again, chat, remember, GDP data. I'm going to put another timer up because in 15 minutes, or less now, actually, in about 13 minutes, we have GDP data going live. So, and then an hour and a half after that, we got PCE data coming out. So, yeah. All right, guys, let's get ready. Here's the timer. NASDAQ is falling this morning, falling this morning after weaker than expected prelim NFP data. We'll put this up on screen, but it definitely did not show up good. It showed up at 62,000 versus, yeah, here's the report right here. 62K. Yikes. Not good. NASDAQ still tumbling down here on this report. 62,000. Much weaker payroll numbers than expected. This is, again, to put this into perspective, the main payroll report, which I think even more eyes are going to be on this report on Friday. The main payroll report is set to drop on Friday. This is the prelim numbers that dropped 2 days prior to the main one, the non-farm payroll report. But for this to come in 50% less than expected is not good. A lot of people are going to be fearful regarding payrolls on Friday because of this report. And again, if you want somebody that's going to cover it live as soon as it happens at 8:30 on Friday, subscribe, hit the notification bell. We do this live every single weekday morning for free right here. Remember, chat, not an investment professional. I'm not liable if you lose. Make your own assessment. Trade smart. I have no freaking idea what's going to happen here. And yeah, we got GDP data dropping in 11 minutes. 11 minutes. So no, I think PCE data. I think PCE data drops at 10 a.m. today. Yeah, from every major report that I'm showing, PCE data drops at 10. So usually PCE drops at 8:30, but for whatever reason today, probably because we got GDP and a whole bunch of other stuff. Yeah. What time zone am I in Texas? I know it's Central. GMT -5. What is UTC, bro? What the heck? Okay, it's the same thing. All right, guys. Again, we got GDP expected at 0.4%. PCE data does drop at 10 a.m. today. Pending home sales drops at 10 a.m. as well. Will the market stop? Gold popping up on this economic uncertainty. And again, we got 10 minutes here. 10 minutes. I had to double check that to make sure. But yeah, GDP data drops in 10 minutes. PCE data drops in an hour and 40 minutes. Yeah, bond yields. Let's take a look at bond yields. Bond yields probably liking this. I would assume they would be. Taking a look at the 10-year treasury yields here. Whoa. Hold on. We already got it up. Let me exit out of this. We got too many windows up here. Again, stick around. Don't go anywhere. This is one of those days where we got a whole bunch of stuff happening. All right, NASDAQ still falling down. Bond yields, chat, dropping even more on this report. Look at bond yields fall down here. So let me get the timer out of the way. Bond yields decreasing even more on this report. Let me consolidate this. Look at bond yields. They are decreasing even more. Bond yields down to 4.14% now, under 4.15% on 4.12%. 13%. We have decreased a lot here, chat, a lot. So just be careful, be smart. Craziness can happen in markets, guys, and you just want to be very, very careful. Again, we have GDP data dropping in about 8 minutes. Again, the reason the market is falling drastically like it is, everybody's fearful right now. Look at the NASDAQ fall even more, is because the prelim non-farm payroll report showed up at 62,000 versus 115 expected, basically 50% weaker than expected prelim employment change payroll data. And the reason this is gauging economic strength is because employment change data shows job creation and business expansion through jobs. So like the more businesses are able to offer more jobs, the more they're expanding, and it signals economic growth. And so with the non-farm employment change data showing up 50% weaker than expected, it gives a really bad sign regarding the economy, And again, this is ahead of GDP, in which is probably going to move things as well here, guys. So just be careful. A lot of stuff's going on. We had the Fed GDP Now report show up yesterday at weaker than expected as well. I think it came in at minus 2.7% for quarter one or something crazy, which I couldn't imagine it's going to come in that weak, but maybe it does. A lot of stocks are turning red right now, as well as futures going red. Bond yields are down even more now on this report. The dollar index is down. Gold is up, fighting up here. And yeah, 7 minutes, chat, 7 minutes. Yeah, and remember, the big report, to be honest, chat, is going to be PCE today at 10. So if you want to know about a recession, all right, if you want to know about rate cuts, today's the day to watch this stream, because we got GDP going live in about 6 minutes, 6.5 minutes. The market is tumbling down on this prelim NFP report, falling fast here, fast. Bond yields are decreasing. Gold is spiking up a little bit, and the dollar index is falling down as we speak. This could cause the Fed to have a little bit higher probability of rate cuts. Let's see. Let's take a look. Let's see if it moved already. So it has gone up a little bit. It's almost at 8% right now. It's at 7.7%. And we might see this rise depending on what GDP shows up. If GDP shows up as expected or worse than expected, we might see this go up even more. Because look at these dips. Again, guys, we got about 4.5 minutes left. Microsoft tumbling down, Tesla tumbling down, Palantir tumbling down, Apple tumbling down, Meta tumbling down, the dollar index tumbling down, gold spiking up, bond yields falling down, which is interest rate sentiment. Bond yields and interest rate sentiment run parallel with each other. How can rate cuts help this? Because lowering interest rates stimulates the economy, because when people have cheaper access to money through low interest, they tend to spend more, businesses expand more, and thus it stimulates the economy. Higher interest rates pushes the economy down a little bit to combat inflation. And so if inflation was the problem, the Fed would raise rates. If economic weakness is the problem, the Fed will lower rates, right? It depends on what's the risk. If both of them are a problem, the Fed will kind of stay still. But again, bringing interest rates down stimulates the economy through increasing spending. When interest rates are lower, people spend more because they have cheaper access to money. And that's what it means. It's called a loose or dovish Fed. When they're pushing interest rates higher to push down the inflation, it's called a hawkish or restrictive Fed. All right, chat. NASDAQ's hella red right now. Gold hitting 3,300. Dixie's still going down. NASDAQ tumbling down. 4 minutes. 4 minutes. And again, chat, later on today, we got Microsoft Meta earnings. We got PCE. I didn't think the prelim NFP data would move the market like this. I didn't even title my stream. I mean, we cover it because we cover everything, but I didn't even title my stream about the prelim NFP data because I didn't think it would have a big influence. I think everybody's scared now heading into GDP. We got 3.5 minutes roughly until GDP drops. I think people are nervous now. This is sparking nervousness for sure. 3.5 minutes, chat. All right, guys, we have 3 minutes left before GDP. GDP for last quarter showed up at 2.4% for quarter four of 2024. Today, they are expecting GDP to reduce basically 2% quarter from quarter. Now they're expecting 0.4%. Last time they expected 2, or they came in at 2.4% for quarter four. For quarter one of 2025, they are expecting a contraction down to 0.4%. 0.4% here. And this is on the heels of weak economic data and the non-farm employment change showing much worse prelim job numbers, showing up at 62K versus 115K, basically 50% less than expected here. Very weak, very weak. And the market did not like that at all. And now we got GDP data showing up in 2.5 minutes. And again, if GDP data shows up weaker than expected, Bad things can potentially happen. I have no idea what's going to happen, though. I'm not an investment professional, of course. I'm not liable if you lose money. Always make your own assessment. Trade smart, guys. I can't guarantee anything's going to happen here. But, yeah, be ready here, Chad. This is a big day. All right, Microsoft all the way down to 392s here, Chad. 392s. Again, we got less than 2 minutes. Gold has reacted positively to this report, though, so gold has gone up. All right, here we go. We got a minute and a half left. Yeah, honestly, today we got a whole bunch of stuff, to be honest. And again, at 8:30, in a minute and a half, we got not just prelim NFP data, or not just GDP data, but we got like employment benefits, employment wages. We've got GDP sales, consumer spending, a couple other things too. So again, it's a big day. We got less than a minute left. Or we got a little bit over a minute left, I'm sorry. So again, ADP non-farm showed super weak data. Super weak data. Markets consolidating ahead of GDP. We got exactly 1 minute left right now. 1 minute left. Hit the live button next to the play button. Hit the subscribe button. Hit the notification bell. We appreciate it. We finally got a day of big economic reports. Yeah, where's Bitcoin at? 40 seconds, chat. 40 seconds. Bitcoin is falling. It's not down that much, but it's at 95.5 or so. All right, guys, here we go. It is time. 25 seconds. 25 seconds. We're going to watch bond yields. Here we go. Ten seconds, guys. 10 seconds. This timer's a little bit early. Ignore it. All right, here we go. 5 seconds. 4, 3, 2, and 1. Let's see what the report showed. All right, guys. GDP showed up at 0.8%. Or no, that's Mexican GDP. I'm sorry. GDP showed up at minus 0.3% GDP quarter to quarter. Minus 0.3% quarter to quarter. Way weaker than expected. We actually showed up at negative GDP estimates for quarter over quarter. Minus 0.3% quarter over quarter for GDP. Minus 0.3% for quarter one. Sheesh, bro. Minus 0.3%. How is the market reacting positive to weak GDP? Very strange. Again, minus 0.3% for quarter three or quarter one for GDP. GDP quarter over quarter, minus 0.3% versus 0.2%, 0.4% expected. So, again, GDP showed minus 0.3% versus 0.3% expected, much weaker than expected. This is a very strange move because the market is actually reacting positively to this. We got a negative GDP estimates right now, guys. All right, guys. What do you guys think of this? Negative GDP. I wouldn't be surprised to see the market come back down. Negative GDP. Again, minus 0.3% versus 0.3% expected. Weakening GDP data here, guys. Weakening GDP data. I would not be surprised to see the market fall. And there it goes. Sometimes the first move in this instance is the wrong move. We still got to wait for PCE data to come out. Core PCE shows up at 10 a.m. today, guys, so stick around. We got PCE, which is probably going to be a bigger report. There's the negative reaction. I'm not shocked to see this come back down. I don't know why it bounced up. Maybe trapping some optimistic longs, but this is the reaction I would expect from losing GDP data. So just in the last 30 minutes, chat, just in the last 30 minutes, we have had negative GDP estimates at minus 0.3% for GDP, negative GDP estimates. We also have 50% worse payroll prelim numbers than expected. We'll get the finalized numbers on Friday, and the market is dumping down here in this report. Dumping down in this report. Does this mean a recession is coming, guys? Let me know what you think. We're trying to cover everything here, but man, this is chaos, to be honest. This is chaos. We'll put this up on screen so you can see it. Here's the numbers right here. Minus 0.3% for GDP. Yeah, there's the reversal I expected here because GDP showed up negative versus a positive expectation. That's never good. Again, that's never good. Like I said, if GDP shows up negative, we might get red, fear, panic, disaster. And that's kind of what we're seeing right now. We're at 19.351s right now. Bond yields. Let's take a look at bond yields on this report. Bond yields are still falling down. Chat, still falling down. Let me refresh. Oh, no, bond yields are spiking a little bit on this report. Yeah, bond yields are going up. So a higher interest rate sentiment on weak GDP, which is just nonsensical sometimes. But, hey, bond yields spiking up a little bit just now. Back up to almost 4.2%. Dollar index spiked up a little bit as well here. So could be employment cost. Most of the employment numbers showed up as expected. And again, stick around, guys. Don't go anywhere because we got PCE at 10 a.m. PCE inflation data 10 a.m. live right here. We'll see what happens. Market is down a lot over the past 30 minutes, though. And again, if you haven't already, check out TopStep. TopStep gives you a 50K demo. If you want to learn to day trade, do not fund your own account. Most day traders lose. If you put up your own money, you're probably going to lose whatever it is. TopStep, they give you a demo and they test your skill in a structured environment first. It teaches you how to trade. It teaches you how to trade better. It's $49 a month. If you can make $3K in profit on the base one without losing $2K first, a 3-to-2 reasonable ratio. They fund you $50K. They let you keep your first $10K in profit, and then it's a 90% split afterwards, which is very similar split to funding your own account. So it's limited risk at $50 a month, basically. If you pass it, it's a very similar split to funding your own account, much less risk. It's the best of both worlds, and they've paid out hundreds of millions of dollars in the last few years. They've been around for over 12 years, a great way to learn. And if you use TopStep X, there's zero commission and a tiny amount of fees per trade. It's just a perfect way to learn. We put in a withdrawal with them on Monday. We'll see when it gets credited. And then we're going to switch over to their new dashboard, which is even better, chat. It's even better. If you want to check them out, they are an affiliate of mine. Some would say I'm the top 3 most biased trader of all time ever in the world. I'm not an investment professional. I'm not liable if you lose. Always make your own assessment. Trade responsibly. Understand CFTC 4.41. I can't guarantee anything. You want to confirm it all with them. Not an investment professional. Market's starting to bounce back up a little bit after deeply negative GDP relative to expectations. And then the last big report today, guys, is PCE inflation data at 10 a.m. PCE is not out yet, from my understanding. Yeah, PCE is not out yet. PCE drops at 10. Now, we had, just to put this into perspective, though, we had, so you got to understand, every time GDP drops, PCE drops the following day usually is what it is. But today they're on the same day. So y'all are looking at PCE prices. That's not the right one to look at. See, I mean, again, 1975, what's frustrating is that you embellish it just to be right. I never said GDP couldn't fall this fast. What I said was to enter a recession, we need 2 consecutive losing GDP quarters, and we do not have that yet. We just don't have that yet. Again, this is the advanced estimate for GDP, which is the least accurate number, and we just don't have 1 negative GDP quarter yet, let alone 2 that's finalized. And so acting like I said GDP couldn't fall this fast just to claim to be right is a little bit misleading, brother, just to put that out there. I told you guys, if we get a negative GDP, it's looking rough, and we could obviously hit a recession now if we continue. Once this GDP is finalized for quarter 1, which will happen in a few months, we'll get the finalized quarter 1 numbers. And once we start looking at what quarter 2 GDP is going to look at, we might be getting close to a recession, but we're not there yet. We need 2 consecutive losing GDP quarters. We haven't had 1 finalized yet. And so that's my point. Yeah, we need 2 negative confirmed quarters to be in a recession, which we're not in one yet. I'm not saying we're not heading that way. It's definitely looking scary right now. Honestly, if I was the Fed, I would cut rates, personally. Because if we start, keeping rates high for too long is kind of like picking up pennies in front of a train track. The longer you do it, the worse it gets. Or the higher the risk that gets there. We've had rates over 6% for mortgages. The Fed funds rate is over 4.5%, or over 4% for a long time. I think lowering rates makes a lot of sense. And again, I'm coming from somebody. At the same time, though, what it really depends on is inflation. Inflation has to be under control first, and we're going to get a look at inflation a little bit later on this morning at 10 a.m. today, guys. So again, we're going to get a deeper look at inflation at 10 a.m. because at 10 a.m., which with a very weird day, we have PCE inflation data going live at 10 a.m. Yeah. Again, the point is we might be on our way towards a recession. We have to wait for the finalized numbers. Like saying we're in a recession before quarter one ends, you know what I mean? It's not accurate. Why? Because quarter four was 2.4%. If the next quarter hasn't even ended yet, we can't be in a recession until we have 2 consecutive losing ones. And again, we just don't have that yet. Not saying we're not heading towards one. We just don't have it yet. But it's looking rough. It's looking bleak. Of course it is. I'm just glad I cut most of my stocks in December, in all honesty. Because if I didn't, I might be stressed right now. I might be really stressed. All right, guys. Massive PCE data coming out today. Oh, what a scary market right now, guys. Sorry, I'm kind of editing my stream because we got... There we go. Yeah, the next big one, guys, PCE inflation. GDP tanking markets. We'll see what happens. But it's a scary time. Scary time. Market is still falling down. Let's watch 325 to see if we get a bounce. I'm not going to try to catch a falling knife here. I'm just not. I'm surprised gold, honestly, isn't pushing up more than this, to be honest here. Gold is kind of down big on the day. I'm surprised gold's not pumping up higher in the wake of all this stuff going on. What is the likelihood of a rate cut? I'm assuming the only thing this should do is go up. Unless the June expectations. See, what's weird is that this actually rate cut odds went down. June reading has to go up even more, though. Yeah, so it's at 63, 64%. Yeah, I mean, this is not a shock. GDP showed up negative. It's the initial advance estimate, so it's the least accurate number. Another interesting correlation here. We have bond yields rising. We have the odds of a rate cut going down for next month in May at 94% right now, and the market is tumbling down on this report, chat, tumbling down. Yeah, again, I'm not going to try to buy this. It's just too risky. It's too much momentum heavy. We're heading towards deep red on the day. We're at 19.3s right now, 19.3s. I think the next big level is 19. Like the next big level is 19. We'll see if we continue to tumble in the NASDAQ here. The dollar index is actually increasing, which is kind of nonsensical as well. But sometimes it has an inverse look of markets. Gold also pushing up a little bit. Bond yields rising here. Here's TNX. Look at TNX go. So this is 10-year treasury yields. Look at the NASDAQ tumble even more here, guys. NASDAQ tumbling even more. We also had a bond auction just show up right now about 10 minutes ago. It says Treasury to sell $58 billion of 3-year notes on May 5th, $42 billion of 10-year notes on May 6th. This might be impacting it. Repeat USC SETI auctions for the next several quarters. Yeah, what do y'all fear more? Chat, what do you fear more? I'm going to end this poll. We got over 1,000 votes. 45% think lower, so the chat was right. Here's a really interesting poll leading into PCE inflation. What do you currently fear more? Economic weakness or inflation? I'm not going to give a both option because I think that's too easy. Obviously, everybody should fear both. But I'm going to pick which one do you fear more? Economic weakness or inflation? Love you.
Love you.
Have a good day. All right, vote on the poll, guys. NASDAQ has not had a red candle in 1, 2, 3, 4, 5, 6 minutes. 6 minutes. Bitcoin crashing down here a little bit, down to 95K. Apple looking red. Take a look at some stocks. Gold pushing up. Bond yields rising. Apple down to 208s. Microsoft down to 380s. Meta down to 540s. I love you, bud. Hey, you doing okay, man? Hey, listen. All right, guys. Sorry, my son came in here. Stagflation. Yeah, stagflation is obviously a risk right now, which is a recession precursor. Stagflation is a period in which we have high inflation and weak economics. And so if PCE comes in higher than expected, I'm going to be yelling stagflation right now. But again, look at these drops in markets. We finally got a little bit of a green candle here pushing up. We'll see if the market holds. But yeah, are we in a stagflation environment, guys? I don't know. John, would you personally rather have a recessive economy or an inflative economy? I would absolutely rather have a recessive economy, personally. Okay, because you got to think about it. But again, I'll be honest about my bias here, right? I'm self-employed, and so the money I make is my. I don't make more money as inflation rises, right? Like, I make what I make. And I don't get increases if inflation goes up. And I guess a lot of the public doesn't as well. But in that regard, a recession, like during 2020, my business did better than ever, right? During this latest economic weakness, my YouTube streams, my businesses have done better than they ever have, okay? And so I would much rather a recession without prices rising. Inflation should scare everybody. Okay, $100,000 a year used to mean something. I don't really think it means much now. I think you make $100K a year, you're pretty average. No offense. And so I think the problem is inflation will take all our money away over time if we're not careful. And so and the only time inflation literally goes down is during recessive or depressive economies, to be honest. It's the only time inflation actually goes down usually. It might slow down, but the only time it literally goes down is during those economies. And so I'm okay with entering a mild recession as long as it means we get inflation under control. And honestly, I think the Fed probably is as well. But you never freaking know. Obviously, the current president does not want that under his watch because it's reflective of him and tariff policies and stuff like that. And again, I don't pick sides. I'm very neutral politically. To be honest, I agree with some of the things the current president is doing, and I disagree with some of the things the current president is doing. I'm not really one that acts like everything he does is wrong or everything he does is right. The real answer and what most people truly believe is somewhere in the middle. But what do I fear more? I fear a recession more. Or I fear inflation more is what I fear. All right, guys. So we're still breaking lows, coming down. We're at 19,275. 19,275. Inflation is the bigger long-term risk with 37 trillion federal debt. Honestly, Nick, to be honest, though, it's actually the opposite. So inflation is actually better for debt. Okay. And what I mean by that is like, look, so let's say we get big 10% inflation. It's never going to freaking happen, really. I mean, it could happen. But let's just say we get deep. Let's say, what's the debt? What was the number? Some big number. Hold on, let me find it. 37 trillion. Okay, let's say we got 37 trillion in debt. Million, billion, trillion. Okay, let's say we got 37 trillion in debt. Okay, let's say inflation grows by 10% a year. All right. Let's see what happens to this debt in 40 years. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22, 23, 24, 25, 26, 27, 28, 29, 30. We'll call it 30 years. So that debt, in terms of the significance of that debt, has decreased from 37 trillion down to 1.5 trillion. All right. And so long-term inflation is honestly better for the debt, not worse, just to put that into perspective, if that makes sense, right? Because it's limiting the significance of it. It's kind of the same thing. Like, one of the reasons you can hedge against inflation with real estate and including mortgages is because, let's say you're paying $2,000 a month in a mortgage, right? In 30 years, $2,000 is going to be a lot less significant of a payment versus today. Okay, and so in that regard, you can hedge against inflation in that way as well, even if it's through a mortgage. Now, there's some other, it's really nuanced, but that's my point, is that in terms of debt, inflation actually helps debt, not makes it worse. Anyways, NASDAQ is still dropping here. We are almost down to 19,250s, 19,250. Let's see if we continue down. Yeah, 10-year yield spiking. You can see it's actually pulling back a little bit right now. So here's the 10-year yield. You move the percentage point once, or the decimal place once over. We're at 4.2%, 4.2%. I'm the bigger long-term risk of submitting you in jiu-jitsu. Bro, I would guillotine you and armbar you in about 3 seconds, bro. Get out of here, dude. You're getting bow and arrow choked within 5 minutes of us rolling. 100%. Definitely top 3 greatest jiu-jitsu practitioner in the world right now. Top 3 worst blue belt ever. Yeah, PCE data. Let's see what the expected numbers are for PCE. PCE data expected at 0.1% today. Last time was 0.4%. They are expecting a drop. Year over year, it's expected at 2.6%. And PCE is the Fed preferred inflation metric. I'm the top 3 worst jiu-jitsu person ever in the world. Dagestan. All right, guys. Market's bouncing back a little bit. Bond yield's decreasing some now. Let's take a look at gold. I submitted a fresh blue belt when I had 2 training sessions. I'm going to tell you something, Pedro, and I'm going to tell you something that a lot of us experienced jiu-jitsu people understand. He let you have it. He was letting you work. He let you have it. He was building your confidence. You know how many, like, trial guy people I roll with regularly that I'm just kind of like, you know, like, hey, here, like, you know, like, beat me up. I'm just kind of like, hey, beat me up over here. No offense, Pedro. It's all good. Hope you understand. We're still moving up. We're at 19.3s right now. 19.3s. Look at gold, though, fighting its way back up. PCE drops at 10 a.m. today. Let me put this up. You can see it at the top of the page here. GDP showed minus 0.3% versus 0.3% expected. Prelim non-farm data showed 62K versus 120K expected. All right, we got everything at the top of the screen. BJ Penn, the best jiu-jitsu product? Nah. BJ Penn was good. My man's going crazy right now, though. All right, guys. We're consolidating 260s here. 19 260s. How is GDP negative and national employment is less? Do you really, is that a serious question? Because they're obviously correlated. All right, guys, gold's pushing up. Bond yields are now falling down a little bit. Let me see the odds of a rate cut. I'm really judging this. It's hard for me to trade this. I almost want to buy it now, but I'm going to wait. Can you explain that, please? Well, yeah, because economic weakness is economic weakness. Lower jobs numbers for prelim NF payrolls is weak, shows economic weakness. GDP showing negativity shows economic weakness. Less people spending. Why are less people spending? Probably because there's less jobs, right? There's more fear. It's all economic weakness. Like the non-farm employment change data shows how many jobs are there, and there were much less jobs, right? Like, and the reason it gauges economic strength is because it is businesses hire more people, they expand. Thus, prelim NFP data shows economic strength through jobs. If that makes sense. We got the main one on Friday, which is going to be chaos now. Honestly, freaking chaos. If I bought it, would be a short-term day trade, though. There's no way I'm buying up long-term right now ahead of PCE. Yeah, I'm going to put another timer up here, guys. Yeah, no, I think I think a mix of all of it is pretty good. Like I like Muay Thai. I like boxing. We got an hour and what? 2.5 minutes? Oh, I'm sorry. We got an hour and 5 minutes left. All right, guys, here we go. We got an hour and 5 minutes before PCE inflation. Are we in a stagflation economy? PCE is personal consumption expenditure. The real one you want to pay attention to is core PCE. It's the Fed's preferred inflation metric. It's what the Fed uses to gauge inflation. And so when you hear the Fed talk about when you hear the Fed talking about 2% inflation goal, they're referencing year over year core PCE inflation. And so the report that drops at 10 a.m. is that inflation report. It's a little bit different than CPI. You know, the public likes to look CPI and all that stuff. So yeah, y'all be careful today. Again, it's a weird day, man. It really is. Hey guys, listen, to break 160,000 subscribers, we only need about 340 subscribers. We got almost 2,000 people here. I'm not going to pressure you guys to subscribe, but if you do not subscribe, I'll hate you forever. Do it now. Try it one time. It might feel good. Everybody here's doing it. It might feel good. Try to subscribe right now if you can, if you haven't already. I appreciate it. Thanks so much. You can also conversate with us in the chat right now. I know some of you guys are lurking, never saying anything. Y'all are watching right now, and you're like, I don't know if I should subscribe to this guy. Well, listen, I'm going to give you the top 3 greatest plugs to subscribe to this channel ever. We cover everything for free. I don't sell a course. I don't sell a service. I don't claim to be an expert trader. I'm one of the top 3 worst traders of all time ever. Do not copy me. But we give you all the economic reports live right here. We cover everything. If you want to know if something big's going on in the market, we're going to cover it. Hit the subscribe button. Hit the notification bell. You'll get an alert. We appreciate it. Not an investment professional. Don't sue me because I have no idea what I'm talking about, and I have not giving financial advice ever in the world. So again, if you haven't already, hit the subscribe button. I appreciate it. Thanks so much. And he's a cool dude. Thank you. I appreciate it. Hey, thank you, Scott. Top 3 guillotines ever. You know, the problem is, like, I'm used to not pronouncing the L. Like it's a Latin word, like guillotine. I don't know. But apparently, every time I hear somebody in jiu-jitsu say it, it's guillotine. They even call it the gilly. And so, which one is right? Do you pronounce the L in guillotine or guillotine? Let me know. If you do pronounce the L, I've been saying it wrong for years now. Hey, thank you, Dan. Appreciate the love. Thanks so much. Yeah, let me take a look at what bond yields are currently at. Bond yields are currently at 4.19%. You can move the decimal place over 1. I should have bought that dip, guys. Everybody was like, don't do it. I should have. Look at that. Gold's still popping up. Hey, thank you, Patrick. Appreciate the becoming a member, brother. Thank you, sir. Yeah, we're slightly down. I mean, we're going to fight our way back up and end green on the day. We got this. I'm confident. Yeah. Where's the wife? That's her right there. Yeah, I'm asking AI right now, how do you pronounce it? In the context of jiu-jitsu, do you pronounce the L's in guillotine? AI's answering. Guillotine. Okay. AI has an answer. It says, in Brazilian Jiu-Jitsu and in general English usage, the L's in guillotine is pronounced ill rather than the French guillotine. So you would pronounce it as guillotine. I'm wrong here. I've been wrong for a year. How could I get this wrong, guys? I feel pretty bad about it, to be honest. We're pulling back. Let's see if we bounce at 275s. Man. I should have AI'd this a long time ago. It's all right. Yeah, it's Porsche, not Porsche. And I used to say Porsche my whole life. As I've gotten older, I've gotten more sophisticated. So I say Porsche because I'm just cooler now than I was back then. Yeah, I'm from Baton Rouge. I did one of those DNA tests, too. They updated it, too. Apparently, I'm more French and Irish than I expected. The red beard should have given me a signal there. All right, so look at the NASDAQ turn here. NASDAQ's starting to break down. We're at 263s here. 263s. Look at this. Something just happened. Hold on, chat. Something just happened. Whoa. All right, so quarterly refunding. U.S. Treasury is going to sell $58 billion of 3-year notes. $42 billion of 10-year notes. Look at this drop. Whoa. Also, guys, give me a follow on X.com. It's at Beginner Trades on X.com. We post a lot of these breaking news stories as soon as they happen. Like we posted GDP. We posted non-farm employment data as soon as it happened. If you want to give me a follow, here's the link. Great way to help support the channel. Definitely the top 3 most incorrect tan. 100%, bro. But we just cracked lows again. Let's see if 250 holds us up here on the NASDAQ. NVIDIA. All right, here's NVIDIA on the bottom right. Yeah, I mean, it's down. I don't know if it's causing this drop, though. Apple. Meta. Microsoft. A lot of this stuff's falling down quickly here. AMD. Yeah, microchips are falling. Palantir. Palantir just cracked lows. Yeah, I don't know if anything happened there. That might have just been a big red candle. All right, we got less than 30 minutes before the opening bell. We got Chicago PMI at 9:45. Not really a big release. Probably is not going to move stuff, but PCE data at 10 a.m. will. So just be careful. Tesla is falling down pretty drastically here. Look at the Tesla. 280s right now. 280s. Hey, appreciate all the follows. Thanks so much. Again, we need like 300 subs left. You know, do it now. Try it one time. You know. All right, guys, we're still breaking down. All right, look at this rebound back up. Again, we're going to day trade. Again, we are day trading on Top Steps funded account program today. Top Steps funded account program. The futures market, you can day trade the S&P, the NASDAQ, the Dow, the Russell, gold, some currencies. It's very similar to day trading stocks. No PDT in futures. And so most pro day traders actually trade futures. We actually put in a withdrawal. See, I would buy this too, but I'm going to wait. Monday. And again, they give you a 50K demo. You can also get a 100K one or a 150K one. And they test your skill. Learning to day trade in a structured environment like that just makes sense, in my opinion. It just makes sense. Gets you around the PDT rule as well. Like when I got started, I deposited like 4 or 5K in an offshore brokerage. Lost it all really quickly, shorting blue chip companies. And most traders have the same thing happen to them in day trading. You lose your first couple accounts. It's called market tuition. Now, you can either fund your own account and lose thousands of dollars probably, or you can try this out and lose $50 for the base one. I think the latter makes a lot more sense personally, but I'm biased because I get paid by them. But it's genuinely useful for traders, of course, in my opinion. Great way to learn as well. So I'll put the link up if you want to check them out. I appreciate the love. There's the link. It's also pinned at the top of the chat if you want to see it. And we're going to day trade on them. I'm trying to be selective, though. We're too close to these lows, and we've broken down. Like, look at how much the NASDAQ has broken down here. I'll put the regular NQ up because I got less levels on there so you can actually see it. Look at the NASDAQ. The NASDAQ is just flushed down here. Now it's consolidating around lows. GDP showed up negative, so. Yeah, so Humana, we're headed higher. Humana, supposedly. Yeah, but there's no liquidity on it, but it's up after its exit of some unprofitable Medicare plans helps fuel a big beat. So yeah, Humana ended up beating pretty big. Oh, I can't stand this song. What kind of music you guys want for the opening bell? You want tense, exciting music? You want laid back, easy, flowing, lo-fi music? Which one? Let's get a vote. It's a democracy here. NASDAQ just broke lows. We're coming down. We're at 254s, 250s. Let's watch 250s. I have 250 as a level here. I don't want to accidentally buy a whole mini contract, and so I'm going to pull up this. Here's 250s. Oh, this is like the I feel like this is the music the robot from Grandma's Boy listens to. Let me see what the chat says. Yeah, we got a Discord. Tense, lo-fi, recession, lo-fi, Bulgarian polka, metal, R&B, lo-fi. Okay, I got you guys. Leading into PCE, I'll probably switch it up. But for now, we'll put on some regulars. All right, look at the NASDAQ flush. It's at 240s right now. Just bounced right off at 240 here. Bond yield's still falling down some. Let's take a look at the rate cut expectationals. All right, we're at 94s, 95s. This has actually gone down. Rate cut odds for everything. Even for June, the rate cut odds went down, which are very like nonsensical, kind of contradictory. If GDP is weak and payrolls are weak, wouldn't the likelihood of a rate cut go up, not down? Because rate cuts, if we have economic weakness, it's more likely that the Fed is going to cut rates, right? So sometimes these just don't make sense. We do see bond yields start to decrease though, but yeah, sometimes they move nonsensically. Like if we had inflation spike, I would understand the odds of rate cuts decreasing, but with economic weakness reports like we've had this morning, it's just strange. Yeah, inflation could be more important. That makes sense. So that's certainly possible. Yeah. Yeah, remember guys, we got GDP dropping today. Or we had GDP already come out negative. It's one of the reasons the market's falling. I'm really tempted to buy up some of these lows though, but I'm going to let this 240 area test. Tesla's still showing pretty weak here, though. Like, Nvidia's cracking lows of the day. It's back down to 104.60s. Palantir down to 110s. Microsoft at 380s. Apple at 207s. Meta at 540. I feel like we heard this song already, so I'm just going to switch it up. You know what? I'm going to buy this. Don't catch a falling knife, they say. We're going to try to catch it right here. We got 2 contracts here. Took half off, little baby trade, but we'll take it. You can see how similar this is to day trading stocks too, guys. We'll look for 250s up there. Yep. All right, we're out. Just made 15, 20 bucks real quick. We wanted 250s. A little scalp. I'll take it. And again, you can see how similar this is to day trading stocks. We wanted 240s as a bounce, so we called it. Where's GameStop at? I haven't even looked at GameStop. I know they had earnings not that long ago. GameStop all the way down. GameStop's been basically between 20 and 30 for months now, but it's a big range, to be honest, because that's a big percentage. Bitcoin's still falling down, right? Moving in a macro way with markets. Yeah, Bitcoin down to 95s. All right, so we just tapped this previous low up here. I could have held this a little bit longer too. I could also buy 250 here and see if we rebound back up, but I'm just gonna wait. Take a very risk-averse approach. I'm pretty much flat on the day. A little 250 trade might have worked though, but we'll wait. Is GDP that bad? Well, I mean, it's negative. All right, Nasdaq's starting to climb back up. Yeah. At this point in time, it's like the greatest chance of a rate cut is going to be in June. So at this point in time, a likelihood of a June cut is up. I should have bought that 250 dip that I talked about, but hey. But yeah, at this point in time, it's the most probable for June. If we look at rate cut odds. Yeah. So again, June, 57% likelihood. All right, so we are bouncing back here. Let's watch 275s up here. GDP was negative. It showed up at minus 0.3%. They expected positive 0.3. It ended up showing negative at minus 0.3. Now, it's just the advanced estimate, though. So it's one of the least accurate GDP readings. We'll get a more accurate one next time for the second revision. So we'll see. All right, so we just cracked lows again with a quick 2 candles turning red. Looks like we got a little bit of buyers stepping up, though. All right, guys, look at this decrease here. So we're still testing 19.24s right now, 19.24s. All right, so bouncing back up some. I do see Tesla rising. I think microchips are partly to blame for this. We got Nvidia up a little bit, AMD, Microsoft, but we're getting some consolidation. We got 15 minutes into the opening bell, chat, 15 minutes. And again, we got a huge PCE inflation report, 10 a.m. So be smart. So it's a monthly subscription. So yeah, so if you fail the next month, when like they'll reset it. All right, so it looks like the president posted. He said, quote, "This is the previous president's stock market, not mine. I didn't take over until January 20th. Tariffs will soon start kicking in and companies are starting to move into the U.S. in record numbers. Our country will boom, but we have to get rid of the overhang. This will take a while. Has nothing to do with tariffs, only that he left us bad numbers, but when the boom begins, it will be like no other. Be patient," end quote. The president. Yeah, I mean, yeah. All right, so we are starting to rebound. We're at 275s. 275. Yeah, so we're hitting 275s up here. I kind of want to short it, but I'm also worried about a rebound. We'll try to short it, but small position. All right, we got 2 contracts. We tapped 275. All right, we took half off there. We'll hold the rest, kind of break even-y. Out. So just made about $30 on that trade. Beautiful short. This is why I look at my levels here, is because look at this. 275s. Nice little move downward. I could have held to 250s, but that's all right. And again, guys, you can see how similar this is to day trading stocks. GDP price index surged to 3.7, its highest since August. Yeesh. Yeah, so a recession in the U.S. for a lot of people have become the base case scenario moving forward. One-year recession odds predicted by the S&P 500 earnings yield and the BBB-rated corporate bond spreads are surging up right now. So just be careful, chat. Be careful. Yeah, I mean, history doesn't repeat itself, Tony, but it certainly rhymes, is my favorite quote regarding that. Yeah, history doesn't repeat itself, but it definitely rhymes, you know. Blame George Washington. Puts at the opening bell and holds till PCE. I don't know if that's a good idea or not, bro. I really have no idea. I mean, we're down a lot. I think anything could happen. We don't really freaking know right now. We're down a lot. Anything could happen. PCE related to Amazon. Yeah, Amazon still down a lot? I know they dropped a lot yesterday because of like the quotes from Besant and the others. Amazon down a lot too, down to 180s. This 275 level still holding solid here though. Look at 275. And again, we're basically flat on the day. We're slightly red, but again, so again, the big news, like a lot of people are showing recessions. Hold on, let me. All right, there we go. All right, so we are starting to creep up. We're at 275.50s right now, 275.50s. $270s, 265s. Apple at 207s, 208s. This retest at 275 looks interesting, but it almost feels like a trap for a short, so I'm going to wait. We got 8 minutes left, so just be careful. 8 minutes left. And again, we got PCE data in 40 minutes, basically, 38 minutes. Markets are dropping because GDP showed negative way worse than expected GDP data. They expected a positive 0.3% gain. I was showing 0.4% gain for quarter one 2025. Instead, GDP ended up showing up at a negative 0.3 reading, negative 0.3 quarter one GDP for 2025 quarter one. And that freaked the markets out. Not only did we have that economic weakness report with GDP showing up negative, but we also had what really sparked the downward pressure. It was two things. It was GDP showing up negative, but about 15 minutes prior to GDP showing up, we had, you can read at the second line here in yellow, like the second yellow line right here, you can read the U.S. ADP non-farm employment numbers showed up at 62,000. This was relative to 115 to 120,000 expected. They showed up basically 50% worse than expected. Again, the second line underneath my finger right here, way worse than expected, way worse, 50% worse prelim jobs numbers. And this is leading into next week where we have non-farm payroll report on Friday, which is a massive, massive report. That is what is freaking the market out. We had weak economic reports back to back within 30 minutes of each other, 15 minutes of each other. We had non-farm employment, 50% weaker job numbers than expected for prelim payrolls, and then we had GDP show up negative versus a positive expectation. And so a lot of that, I mean, very understandably freaked the market out. And yeah, bond yields are basically flat. We got inflation data showing up in about 30 minutes, 35 minutes, and that might cause even more massive volatility today, leading into the rest of the week. So just be careful, guys. It's a busy week with economic reports for sure. Yeah, I mean, you got to understand. You got to understand what sparked this initial downturn was the prelim non-farm numbers. 100%. Again, I was here streaming it at 8:15 this morning. Like, look, okay, I'm going to zoom out. I know I got a lot of lines on my charts. Let's climb all the way back up here to when this brutal red action happened. This brutal red action started right here. You notice what time this was? This was at 8:15 market time. Literally right here is where the prelim NFP data showed up. And we just dumped down afterwards. And that kind of led straight into GDP. So for 15 minutes afterwards, we fell. And then at 8:30 Central Standard Time, and then right here, we got the GDP numbers. So we dumped into that from non-farm employment numbers, and then we dumped more after GDP. Now we're starting to fight our way back here, so it's looking a little bit better. But it's definitely a weak market this morning. I'll put it that way. It's definitely a weak market. All right, we're hitting 19.3s. Look at that tap. I would short this, but we got 6 minutes before the opening bell, 5 minutes before the open, so I'm a little nervous about shorting it. Maybe I should have shorted it. I'm going to regret it. You guys red or green so far today, chat? Yeah, I'm on Top Step X in futures. You guys red or green so far today? What do you guys? I'm flat basically on the day. Apple creeping up. It's at 209s. All right, so look at that 300. I should have shorted it, man. Like, my levels have been so solid that, like, you know, we got some little momentum trades we could take. Like, look at that one. This one ended up, I shorted this one as well and wrote it down. I just talked about thinking about shorting 300 right here. Should have, but we're close to the opening bell. I got to kind of stick to my rules. A minute, 2.5 minutes left. Apple bouncing back to 209s, though. It's part of the reasons the market's bouncing back. Let's see if we bounce off at 275 right here. Yep, look at that. A little FOMO, can't lie, but that's all right. Yeah, these are just documented like milestone levels, isolated highs, previous highs and lows, confirmation levels. But you can kind of see, like, look at this. We talked about it bouncing right here too, look. Even if it continues down, you can see it respects this level right here. So that's how I'm able to kind of predict it. Meta just cracked lows though. Meta all the way down to 537s. Walmart at almost 96 though. I don't know why. Look at Meta. Meta just cracked lows. We got less than 2 minutes. Meta just broke lows. Amazon testing lows. Apple rebounding back. Palantir rebounding back up. Does he actually speak in 90 minutes, Paul? Because from my understanding, it was a behind closed doors roundtable with CEOs that we weren't going to get to watch. All right, guys, less than a minute. Less than a minute. Palantir still fighting its way. $30 seconds. All right, so China's sovereign fund cuts U.S. private assets amid the trade battle risk. Palantir fighting back, though. Here's the opening bell, guys. 25 seconds. Hit the live button next to the play button. Make sure you're fully caught up on stream. Core PCE inflation month over month expected at 2.6% year over year. And again, 0.1% month over month is what I should have said. All right, here we go. 3, 2, 1, and here's the opening bell. There's the bell. Whoa, look at the red at the opening bell, guys. Wow. And then look at this retracement back up there. Whoa. 250. Meta breaking down. I gotta put like Apple up here. Meta falling down. Look at Nvidia. Nvidia breaking down. And then a big retracement. My hands are off. I'm not messing with this. It's too volatile right now. I gotta wait for it to settle down some first. Nvidia bouncing back up. Apple still falling down. Look at this red candle just blowing through all these major levels here, testing lows of the day. I'll short into 250 if we get it. Kind of a risky move here, but I'm going to take half of that off immediately and then wait. Somehow we made money on that trade. We were down $50 very quickly here, though. We are now green on the day, though. That's nice. If we get a retrace back up there, I'll short it again. But I see Apple kind of flying back up, so I'm going to wait. Oh, I clicked it and I didn't click it. Oh, I clicked it, but I missed the button, and then it retraced all the way back down. You guys heard me click it? Oh, well. I'll be all right. I think it's going to crack lows right here in a second. I might be wrong. Don't copy me. Not an investment professional. But I think it's going to crack lows. Let's see if I'm right. It's so close to lows, I would assume it's at least going to break. Do I want to put my money where my mouth is 2 minutes into the open? Okay, sure. I'll try it. Punished. I don't know. I could add to this too, but I'm going to add to it. We'll take a risk. I'm going to take half of that off. because we can be a lot more loose with it if we do. It's so volatile right now. We're basically flat on the day right now anyway, so it doesn't matter too much, but we'll leave 275 be our risk. See if we come right back down. My fault for trading the opening bell. We gotta cut that now. We got a double bottom right here too, but again, Nvidia pushing up too strong. We'll lick our wounds and see if we get another good trade to get in. Let's see what else the market gives us. See, there's a retracement back down. We're under 275 here, though. I might get kind of greedy here and attack it again. We'll take 2 contracts. See if 275 rejects it. I am trying to take a larger size, but Nvidia hitting that VWAP level. Alright, I gotta cut it. I gotta just wait. I'm gonna switch accounts. We're gonna have to lick our wounds with this one. And we'll switch accounts to our different one. Wait. Let me make sure this is the right account. Okay, yeah, that's the right one. You don't love to see it. You don't love to see it, but we're not gonna be perfect as traders. We had a good green streak. Jimmy Carter said this does. Maybe. What a big red candle here. Let's see if 275 holds. I'm worried we're going to chop sideways leading into PCE is what I'm worried about. We got some sideways chop. Let's see if 250 holds now down here. All right, so somehow I got myself basically back to break even. You know, my mental was basically shot. So I had to trade this one off stream a little bit, which I did. And you can kind of see the string of good trades we got into. So we're basically back down to flat here. We'll see if we can go back green on the day. Nvidia is still looking kind of weak, but I think we might bounce right here. Let's see if we pop. Flat right now. Yeah, we got to cut that one. We got 240s. We're getting too close to lows. I don't like this at all. The problem is Apple is turning red. Palantir's turning red. And again, we got PCE data in 23 minutes. Like, the thing about it here is that we could get straight at chop, but it does look weak. So if we get a little retracement back up, I'll short it. And that means we might miss the actual break here, but it's all right. I think the third test is much more probable if the first... Yeah, there's the break. We needed a retracement back up. I just didn't like it. Look at this red showing up. Palantir turned. It could liquidity grab back up and we could be choppy though. That's the only thing I'm worried about here, but I don't really like either direction. Yeah. Still looking kind of red. Look at Nvidia turn. Apple's already red. Palantir's red. Meta's looking bleak. Amazon's red. So I want to short, but I need a bounce up before I can. I might miss out on some low of the day breaks. I need a bounce to like 240. That's what I want. 200 might hold right here though. Recession incoming? Possibly. I mean, we're negative GDP estimates. A lot of people think so. Oh, I was going to buy 200, but it just broke right underneath it too fast. We'd short like 225s or 240s now, but we need it. I'll try to buy this, catch a falling knife. We'll see how it goes. Not really going good. We'll probably get out flat here. Yeah, we'll cut it flat. It's just too risky. Ooh, we got out just in time there too. Just too much red. I want to short up here too, but we'll see if we can. I see Nvidia starting to fight back. That's why I want to see if it brings this back up. The problem is that Palantir is still looking very weak. Amazon's still looking very weak. Where's Tesla? Tesla is falling down faster than any of them. Tesla down at 270s. Yeah, there's the bounce back I wanted, but again, here's Nvidia rebounding over that level. I'll try to buy it again, but leading into inflation data can get scary here. We'll add. Sheesh, bro. I'm gonna cut half of this. I just can't, like, I'll cut half of it and then I'll see if we can bounce a little bit, but that's better. Yeah, I gotta cut this. I'm catching a fallen knife way too much on the day. I'm gonna switch again. I just can't mess with it. Usually the system works, but today the momentum's too heavy. Look at this brutal red, 1915s. Just nasty red. Look at Apple fall. Let me see if there's any news. President says, quote, "This will take a while, be patient." Definitely top 3 systems ever. Worst systems ever, maybe. We see a little bit of strength showing up, though. Let's see if we hold now. Again, I'm going to wait. 150s maybe hold, but Apple has just had 1, 2, 3, 4, 5, 6, 7 red, deep red candles. Looking nasty. honestly, we got ourselves back to mostly flat again. Like we doing okay. Like, look, I'll show you guys the account again. Like we're pretty much flat on the day, but it's been a battle. We were trading a little bit more with the momentum this time. The problem is Apple's still just flushing down. We got 17 minutes before PCE data. And PCE data is a big release, chat. Like a big release. Eventually we have to go a little bit green, I would assume, but every time I say that, the market just dumps down. Just woke up. What happened? GDP showed negative. All right, so White House trade advisor Navarro says the earlier data was the best negative GDP print he has seen, including 22% increase in domestic investments, along with other positive signals under the hood, according to CNBC. I'm going to buy this now. It's risky, but I see some optimism in some other stocks too. I'm gonna go ahead and cut it right there. Look at Nvidia get back over the VWAP. Apple finally having a green candle here. The range is a little crazy, chat. We got 15 minutes. 15 minutes. Subscribe, hit the notification bell. Whew. PCE inflation data, 10 a.m. Be ready. $15 minutes before PCE inflation. A big negative rejection back down under. Chicago PMI showed 44.6. 44.6 versus 45.5 expected. A little bit more optimism in manufacturing, though. So, again, 44.6 versus... Oh, no, we came in weaker than expected. I'm sorry. Yeah, formula moments. I think you might be really, really delayed on the stream. All right, guys. So again, GDP showed up much weaker than expected at early this morning, about what, like an hour and a half ago, at minus 0.3% versus positive 0.3 or 0.4% expected. We have PCE inflation data coming soon here now. It comes out in 14 minutes. 14 minutes. Chicago PMI just released weaker than expected as well for manufacturing. PMI is strength or weakness in manufacturing. It stands for the Purchasing Managers Index or services. So a higher than 50 reading means an expansion in those manufacturing sectors or services sectors. Below 50 means weakening in those sectors. So higher is better. It means more expansion or more strength in manufacturing. Lower is worse. It means weakness in manufacturing for PMI. I want to buy this, and somehow we're pretty close to flat on the day. But it hasn't come easy. Yeah, maybe my buy intuition would finally work. All right, guys, 13 minutes. 13 minutes. I'm going to buy this. Kind of a risky, but see if we can get a move up and then add to it potentially here. I took half off. Still rising up. All right, we're green on the day. Back green. Took a while. 12 minutes. PCE inflation is the Fed's preferred inflation metric, guys. Looking at bond yields. Bond yields are, let's take a look. Still falling down under 4.2% at 4.15%, 4.16%. NVIDIA and cloud providers such as Oracle are rushing to ship chips and service to data centers outside the U.S., according to the information. So this is something else that's going on right now. All right, so the mineral deal does not cover other energies and stuff. But again, chat, we have 11 minutes left. We are seeing somewhat of a rebound. NVIDIA bouncing back up. Bond yields are starting to rise back up. Some Palantir is up a little bit. Apple's still pretty red on the day, but it's started to bounce up a little bit after a really red open for Apple. Tesla consolidating after a pretty weak open as well. Tesla's down to 275. Meta, another stock that has earnings today, they are expected to come in at 4 p.m. Eastern Standard Time. They are back up to 430. It's kind of flat on the day. So we are seeing some rebounds here leading into PCE inflation data. I want to short 225 if we get it. But we need to bounce all the way up there. And I don't know if we're going to get that. Are we short or long right here, Chad? What do you guys think? All right, I'm going to start jumping in one short position here, and we'll try to add up to 3 at 225s. There's 2. Take half off there to protect it. I'll hold the rest break even now. All right, we're going to go ahead and get out right around 2s. Ooh, back and forth day, but we're green. We haven't traded our other accounts besides this one. We're good. We got 9 minutes here, chat. 9 minutes. We just need to cut spending, not make prices. Yeah. All right, guys. PCE inflation dropping live here very soon. 9 minutes. Again, do we have a... Okay, here, we're going to do one more poll leading into inflation. We got 60-40 basically for recession, inflation, or economic weakness versus inflation. So with core PCE inflation, will core PCE inflation come in higher or lower? All right, so we're going to go higher, lower, as expected. Vote on the poll. Let me know what you guys think. Look at this turn down. So we are starting to turn down a little bit. Honestly, we're too close to economic reports for me to ride this trend because I think we could also come back up and just be flat like this leading into the PCE inflation report. It also could do the complete opposite and head down. But for me personally, a lot of the time leading into these reports, the unknown is there. So traders are apprehensive. So we get something like this, you know, where we just kind of like trend sideways leading into the report, if that makes sense. So for me personally, I'm not going to try to jump on this downward pressure trend. I'm too worried about a bounce back here, but I have no idea what's going to happen. So I'm just going to try to trade smart. Yeah, so PCE expected for core. Core is the big one. Regular PCE is not really a super relevant one. The big one is core PCE inflation. It's expected at 2.6% year over year and 0.1% month over month. We also have pending home sales data that drops live at 10 a.m. as well here. So we got a lot of stuff that drops live 10 a.m. So, yeah, just be smart. Massive inflation reading. All right, guys, we got PCE data going live. Y'all just be careful. All right, guys, PCE data going live soon. Market's testing lows now, right around these lows. Whew, here we go. We got 6 minutes left. 6 minutes, chat. Yeah, I do much better with shorts for sure. Much better with shorts. But, I mean, it's easy to make money. I've been doing better with shorts recently, especially with the market crashing, basically, over the last month or two. It's much easier to short things when market's crashing. But, you know, I like shorts a little bit more. I think I read the momentum of shorts a little bit easier. So, hey, later, Tiny. Have a good day. Y'all be safe. Yeah, indices are falling down. GDP data crashing markets really this morning. And then we have the prelim NFP data going live too. All right, so we're starting to creep back up. We got 5 minutes exactly here. Hit the live button next to the play button. Hit the subscribe button, guys. We do this live every single weekday morning for free right here. 5 minutes. Subscribe. Hit the notification bell. All right, here's the rebound. Let's see what the poll says. So we did a poll. 46% think PCE is going to come in higher. 42% think lower. 12% think as expected here. If I had to guess, I'm going to go with as expected. I think that's what the market needs right now. And so maybe that's what I'm going to go with. I'm going to go with as expected. I'm going to go with 2.6% year over year PCE. I might be wildly wrong. Don't copy me. I'm not an investment professional. I'm not liable if you lose. Remember, I am terrible and have no idea what I'm talking about. I might be wildly wrong. Sometimes I trade off stream. You don't see it. Understand CFTC 4.41. Be ready, guys. Here we go. NASDAQ is around lows leading into this report. I'm going to put the SPY up on the top right. Maybe put like gold up because of this inflation report. SPY down, gold up, NASDAQ down. Amazon breaking lows right before this report. Again, we got 3.5 minutes. Perma bear is somebody that's always bearish, regardless of what's going on in markets. All right, guys. Look at the NASDAQ crack lows here. Right before this PCE report. Break of lows just now. Big red candle showing up. Wow. Big red candle showing up here. 3 minutes exactly, guys. NASDAQ just cracked lows. We're at 115s. Meta just broke lows. Tesla just broke lows. Amazon just broke lows. All right, chat. We're getting very close to PCE's report. We'll see if this can save us or hurt us more. Will this save us or hurt us more here? We bounced right off of 115. Look at that level. Doesn't mean we're going to hold it, though. A lot of momentum on the downside ahead of this report. We got 2.5 minutes left. Chat, 2.5 minutes. Yeah, I mean, I'm not permanently either. I know the true edge of markets long term is on the upside. Anybody that tries to argue about that is just trying to argue probably because they missed out on like investing long term and they lost money and inflation and all that stuff, so they want to act like the market's always been bearish or whatever. But most of the time the market's going to go up long term. Short term, you never freaking know. And when I say short term, I mean like max 5 years. You never know. All right, guys, here we go. PCE inflation going live very soon. Very soon. Whew. All right, guys, let's do this. A minute and 20 seconds, chat. A minute and 20. PCE inflation expected at 0.1% month over month for core. 2.6% core year over year expected. NASDAQ is tumbling down here ahead of this report. We got 1 minute. All right, chat. 50 seconds. 50 seconds. Hit the live button next to the play button. Make sure you're fully caught up on stream. A lot of you guys might be delayed. Hit the live button next to the play button. Make sure you're fully caught up. You can also put it in 2x speed. It'll always stay up to date with the stream. I'm going to mute this timer. And we have 40 seconds left, chat. 40 seconds. 40 seconds. The data's not already out. If you think PCE data is out already, it's not. You might be talking about the 8:30 release of core PCE prices at 3.5%. That is not PCE. We're talking about core PCE index is what's dropping in about 20 seconds. Going live in 20 seconds. Hit the live button. Good luck. We'll see what happens here, chat. We'll see what happens. Here we go. 10 seconds. 9, 8, 7, 6, 5, 4, 3, 2, and 1. Here's the report. Waiting for it. Market hasn't moved. They haven't dropped it yet. Market hasn't moved. They haven't dropped it yet. Pending home sales showed up at 6.1%, much stronger than expected. They're late on PCE. PCE just dropped. They came in at 0%, lower than expected. 0% month to month. Core PCE 2.6%. As expected, 2.6% as expected for core PCE and 0% month to month. This is a little bit better than expected, the report, especially month to month, showing up at no inflation, rising month to month for core PCE inflation at 0% versus 0.1% expected, 2.6% as expected year over year for core PCE, as I told you guys would probably show up there. So I got that one right, actually, for core PCE year over year. Again, 0% month to month, 2.6% year over year as expected. Flat pending home sales showed up at 6.1% versus 1% expected, and the market likes it. It's going up a little bit. Regular PCE did show up a little bit higher than expected year over year at 2.3%. Regular PCE month over month showed up at 0% for both. So better than expected PCE inflation data. Versus 0.1% expected. As expected. Inflation. So a little bit better, honestly, a little bit better. Let's see if the market holds, but the market kind of needed this at this point in time. So market kind of needed this as expected. Again, 0% versus 0.1% expected. As expected, 2.6% for, yeah. So again, we'll put this up on screen. We'll put up core PCE year over year, again, 2.6. Pending home sales. Pending home sales did show up a little bit better as well at 6.1% versus 1%. So here's all the reports that just dropped, consolidated into one list right here. I'll put myself at the top of it, but here's all the reports that just dropped, consolidated to one list right here. Market has reacted positively. Again, inflation data mostly came in a little bit better than expected. So core is the big one that everybody watches. Regular PCE, you know, it's not the biggest report, but it's still relevant. But somewhat better than expected inflation data here. So I think this opens the door to more rate cuts. I think if we look at TNX, it should be dropping. Let's see. No, it's rising. Weird. But this is better than expected. It wasn't worse inflation. It was better inflation. So, yeah, that is basically where we're at now. A little bit better than expected. I think this increases the odds of rate cuts as well. And I kind of want to buy this dip. We'll try to buy it right here, I guess. See if we can add into it. We're slightly green on the day, but it's a small day, and we're kind of flat. And we got a little cushion here that we can buy into, but see if we get a little green action here in markets where we entered a 2-contract micro position here. I don't really like this, but we'll give it some time. See if we retrace back up. I'll take half of that off. We just unloaded a piece of this, and then we're gonna cut that as well. Somehow we got out green on that run of trades too. Up about $100 on the day, give or take. Maybe need a little bit more, but yeah. And again, we're gonna be day trading live. If you want to check out Top Step, one of the best ways to learn. Most day traders lose. You put up the money yourself, you're probably going to lose when you're learning day trading like most day traders do. Instead of losing thousands of funding your own accounts, try Top Step's funded account program. It teaches you how to trade in a structured environment. Great resource for traders. And most day traders lose money, and so it's best to learn in something like this, in my personal subjective opinion. They give you a 50K demo. If you can make 3K in profit on that demo without losing 2K, reasonable 3-to-2 ratio, they fund you 50K with a 90% split, and you get to keep your first 10K in profit. Very similar to funding your own account in that regard. If you fail, you're out $50 basically, or $100 for the middle one, or $150 for the top one. It's not the end of the world, and it's a great way to learn. You want to confirm it all with them, but they've paid out hundreds of millions of dollars, and it's just a great way to learn how to day trade. If you want to check it out, here's the link. You can also find a pin at the top of the chat. But remember, not an investment professional. I'm not liable if you lose. Always make your own assessment. Trade responsibly, guys. I can't guarantee anything. We did just enter another long position here. We're going to see if we go up some and we can add to it. See if we get some strength after PCE data comes in better. Well, we started to get a pop. Now we're getting a drop. See if we get another rebound back up. Little whippy. I'm going to cut half of this off. Very whippy price action right now. I'm trying to give it time, but it's so whippy right now. And the range is big too. You can see the tick counter move. I wanted to add to this. There we go. Take half of that off. We made $20 or so, but it wasn't a lot. Paper hands for sure. Let's see if we can add on a pullback here. Okay, we'll add back. There we go. Oh my gosh, I just shorted. I didn't want to short right there, dude. I keep messing up, dude. Like I'm double clicking and doing all kind of dumb stuff accidentally here. Alright, we're gonna buy back into this as well. See if we bounce right here at 175s. Get a little pop. Here we go. Take half of that off. Get out the rest around the top. Alright, yeah, we're up really nicely today. Somehow it turned into a green day, but that opening bell action was terrible. All right, so now we're dropping down today. The next big news that drops today is Meta and Microsoft earnings. Yeah, guys, like, listen, it's all in ranges. I can say I like a long here, like right here where we bought it, and try to attack this 200 level for a scalp. And then you also could be right if we continue dropping down here, right? Like, neither one of those things has to be wrong. Traders look at things too one-dimensionally. Like, you might trade a different direction, a different strategy. We can both be profitable at the same time. And so it's all about, it has to do with the range and the time frame of the trades. If I'm taking really quick short-term scalping momentum trades and you're taking longer-term range-bound day trades, they can both be right at the same time. Because so many times, like an example, if I buy it right here, You know how many people are going to be like, that's the worst place to buy it ever, bro. And then when the market rebounds, it's just kind of like crickets. It's silence. And so it's really easy to critique trades after the fact. But, you know, we're green on the day. Look, I can't really complain too much. Yeah, are we headed towards a recession? The best question right now. We did this poll. 43% think higher than expected inflation. I'm going to do one more poll. Or no, I'm not going to do any more polls, actually. We've already done like 5. And look, here's the rebound back up. So, long thesis was right. At least short term. Yeah. You're being sarcastic, Blaze. Everybody knows, again, typically the worst traders are usually the loudest in the chat about how bad everybody else's trades are. It has to do with their own insecurities usually. So, I mean, you know, I wish them the best. We're green in every funded account we have, just to put it into perspective. So, feels good, man. Feels good. Meta's starting to rise back up, too. And honestly, this reversal thesis is... listen, I don't think shorting, whenever we have better than expected inflation data, lower than expected inflation data, short term makes a lot of sense, right? Like at least in this range here, after inflation data showed up right there, I don't think shorting lower inflation makes sense short term, right? Long term, maybe. You don't know what's going to happen. Long term, the trend will play out. But everybody yelling at me to short right here where I went long and all that stuff. You know, I'm not going to short stronger inflation data. Better inflation data, I should say. How much time until earnings? We got, what is it? It's 10 a.m. market time. 6 hours until Meta. Earnings, give or take, about 6 hours. Yeah, what I mean is better, like better for us. Lower inflation is better. Higher inflation is worse. Better inflation data meaning like lower is what I mean by that. All right. Yeah, we'll stream earnings today. We got Microsoft and Meta earnings, so we'll stream them today for sure. All right, guys. So, yep. Do I want to buy this, or do I think the market's going to chop leading into Meta earnings? We'll switch accounts. We've already locked in a really nice green day on this one. Okay. Here's our other one. Yeah. Is this the right one? Yeah, that's right. Okay, good. We might short like 250s if we get it, 240s in this one. 60. Listen, I would say like one of the most accurate statements in finance is 40% of the time the market goes up every time, and 80% of the time the market goes down 67.5. Divided by 2% of the time is what I'm saying. Market's bouncing back up. Let's see if we can short this little pop. We'll short about 3 contracts up to 250. If we can get it. 2. Take this last little short, see if we reject 250s right here. I'm gonna give it a little time. Take maybe half off right there so it's not a big loss, and maybe add it back if we get a push back up. Yep, we'll add it back. There we go, 3 contracts. I want to see if 250 rejects it. Let me give it a little time. It's a little bit longer term trade because I want to see if Meta and Microsoft kind of chop for the rest of the day. There we go. There we go. All right, we'll hold the last little piece here. Either do break even or... We're slightly green on this trade, but it's not much. We might add to it too if we get like a confirmation. We're kind of battling 250s here though, so we're kind of flat. Honestly, it could have been a much bigger loss than this, so I'm okay with it, even if we rip up in my face right here. It's right back down. Now we're kind of flat on the trade. Do I want to add one here? Maybe getting a little stubborn, sure. I'll add one, get a little stubborn here. It seems heavy. The other thing is we got 275s over us here. Flat. Slightly green now. Alright, we're gonna... Terrible fill right there. But, out. Alright. $30 or so net from the trade. Could have been bigger. I wanted to do a longer term range and... short into this little pop too. See if we get another little surge down. What do we bounce off of right here? We bounced off of 240s. I'm gonna get out here. We're just taking little baby trades, but I'm green in this account nonetheless. We're up 100 and something on the day in both, but we rejected at 260s. I don't want to get stuck in this trend right here. This little baby trend. I don't want to get stuck in that. Yeah, I mean, Abraham Lincoln famously said, smartphones are bad for you. And I believe him, honestly. I really do. I think, like, when it comes, down to it, he was one of the top 3 wisest people regarding, like, technology and smartphone use in the world. And so when he speaks about smartphones, I listen, all right, guys, so we'll see if 250 right here holds. If it bounces over it, I'm just going to kind of probably bow out for the day. 250 rejected, though. Maybe we'll short it again. How was the data? Inflation data was a little bit easing with inflation going down some. Not literally going down, but slowing. GDP was terrible. Prelim NFP data was horrible. And so bad prelim NFP data, bad GDP data, and okay inflation data is what we got. And somehow we're green on the day. I'll take it. I want to be green. I'm green. We'll take it. Yeah, we're pushing back up. I'm probably just going to shut it down. We're very green on the day. I will take my green day and ride off into the sunset happy. I'll see you guys later on for Microsoft Meta earnings later on today. Be safe. Hit the sub button. Hit the notification bell. Thanks so much, guys. We are pushing towards 160,000 subscribers. Thanks so much, chat. Appreciate the love. We're going to keep growing. Keep the strength up. And, yeah, y'all be good. Remember, later on today, we got Meta, Microsoft, and what else? We got Meta, Microsoft, and one other one. So we got Meta, Microsoft, Robinhood, QCOM, eBay, and more later on today. So y'all be careful, guys. Y'all be careful. I'm going to ride out. I'll see you guys later. Y'all be good. Yeah, join our Discord completely free. Check out Top Step, all that good stuff. I'll see you guys later. What drop? What am I going to miss? Is there another drop? I mean, we got crude oil inventories. This is the only drop coming out soon. Atlanta Fed GDP now at 1 o'clock comes out. I think that'll be interesting because the Atlanta Fed GDP now is for second quarter versus yesterday's first quarter. So yeah, I'll see you guys later. Y'all be good. Have a great day. I'll see you guys in about 6 hours, 4 hours, 5 hours, however long it is.